great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Central America, and but it's in process. We don't have enough to be confident to send it abroad now, but I expect we're going to be able to do that. Thank you.
Are you planning to watch the big SpaceX NASA launch on Friday?
Okay, we have been listening to President Joe Biden give his remarks on basically a report card on where we are on vaccines. There at the very end, he got to ask a question about whether we're going to provide vaccines to the rest of the world, and he said they're working on it. They want to make sure that they're safe. But he gave a fairly detailed report card with 200 million people as of today being vaccinated, and some pretty impressive numbers in particular groups, for example, 65 and older, and really announcing that as of Monday, everybody 16 and over can get a vaccine throughout the United States, no matter what the state is. And now we're joined, I'm delighted to say, by Tim Stenovic. So we never get to talk together. And Carol, you in too? You on?
I think I do.
Yeah, Carol's here as well. They're doing, this is their territory we're getting into right now. Yeah, look.
Just giving David Weston a little bit of a hard time.
Yeah, I deserve it.
All right, everyone. We are going to take over here on Bloomberg Businessweek. Carol Master along with Tim Stenovic, and we're going to talk about the markets here.
We are. Quite a difference than what we saw yesterday. Investors certainly digesting earnings coming in. We are expecting even more earnings after the bell, but they're still concerned with the rise in COVID cases happening outside of the United States.
Yeah, it's hard to ignore certainly some of those overseas numbers. All right, folks, lots to get to. Let's get you going, though, on this Tuesday with a check on the trading day. Here is, actually, it's Wednesday, isn't it? Charlie Pellet,
It's Wednesday.
Is it?
Yeah, Wednesday indeed. Here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing. President Biden announcing moments ago, you heard him live here on Bloomberg Radio, announcing that the U.S. will achieve its goal tomorrow of giving 200 million vaccine shots in his first 100 days in office.
As of this past Sunday, more than 50% of adult Americans have had at least one vaccine shot. We still have a long way to go, but that's an important marker of progress.
Right now, we do have stocks trading at the best level of the day. Stocks snapping a two-day drop. Dip buyers emerging, fueling a rally in companies that stand to benefit the most from an economic revival. S&P up 28, up 0.7. The Dow up 261, again, best level now, up by about 0.8%. NASDAQ up 103, up 0.7. NASDAQ 100 index up by about 0.5%. 10-year yield 1.56%. We've got gold up 0.7, $17.91 the ounce. West Texas Intermediate crude down 2.1%, $61.35 a barrel. Again, recapping equities higher. S&P up 28, a gain there of 0.7%. And on this Wednesday, I'm Charlie Pellet. That is a Bloomberg Business Flash.
Was that a dig at
Hi.
me?
It was subtle. It was subtle. It was subtle.
Quick reminder of what day of the week it is for all of us here. Thank you, Charlie Pellet. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
And it is time now for the Market Drivers Report. And let's set the Business Week agenda. Great duo that we've got with us. Dave Wilson, stocks editor at Bloomberg News, on the remote access in New Jersey, on the phone in New Jersey. Gina Martin-Adams, chief equity strategist at Bloomberg Intelligence. Dave, let's just start with you. Quickly set the tone. It's very different from the last 2 days.
Well, it is, and it's been very different, really, from the opening bell, pretty much. Some broad-based strength in stocks here. 9 of the 11 main industry groups in the S&P 500 higher. Really, the more economically sensitive areas of the market leading the way: commodity producers, energy, raw materials, industrial companies, financial companies, all at the forefront of the gains. And a lot of positively received earnings, even beyond those groups I mentioned. Healthcare certainly jumps out when you see one of the biggest gains in the S&P 500 belongs to Intuitive Surgical, the maker of the robotic surgery system Da Vinci.
I
It's up
saw
49% at the moment. So, yeah, that gets your attention. Edwards Life Sciences, another. It's in the medical device business, up 5.5%. Both those results out late yesterday, and there are plenty more positives where those come from, but it's enough to kind of give stocks some support here.
Hey, Gina Martin-Adams, chief equity strategist here at Bloomberg Intelligence. Give us your thoughts on the way that this trade is playing out, because as Carol mentioned, it is quite a difference from what we saw on Monday and Tuesday.
And somehow I don't think it's going to surprise you, Gina, because I feel like you see more gains coming.
Well, thank you for that. We are generally pretty constructive on the outlook. I think that this is, as Dave alluded to, really reflecting earnings. And over the last week, we have discovered that earnings are on pace to grow about 30% year over year. Many investors were really skeptical as to how sustainable that earnings growth would be, given that the financials really kicked off earnings season, had a lot of reserve releases, a lot of trading gains, and there was a lot of excuses, right? We could sort of say, oh, maybe it's not that durable. But as the season goes on, we're finding out more and more that not only are companies beating expectations, but they're starting to guide us to expect more in the future, and analyst estimates are going higher for future quarters. And I think that that's started to create a little bit of momentum behind a market that was undergoing a bit of a pause over the last week.
Okay, so Gina, I'm wondering how you reconcile that with the data that we're seeing outside of the United States, particularly in India and Brazil, with cases going up, because the narrative that emerged just in the last 2 days was that, hey, investors are pausing buying here because of those COVID concerns outside of the U.S.
Yeah, I'm not sure I bought that narrative. My first answer is I think that the reason that stocks really paused is a combination of, some skittishness with respect to financials and the durability of that trade, and then an extremely oversold condition in low volatility stocks and a little bit of an overbought condition that had emerged in March in small caps and cyclicals, which to me were the real reasons behind sort of a market pause. I think if you were to actually dig into the data, a very, very low percentage of S&P 500 earnings actually comes from India and Brazil. We're much more dependent upon an accelerating recovery in the U.S. than anything else, and there has simply been no sign of that stopping. So I think it's more technical than anything, and a little bit of nervousness around financials that created the pause, not rising virus cases in emerging markets.
Hey, Gina, before we bring Dave back in, one thing I do want to ask you is, when does, and the financial crisis taught us this, there was a point where we thought developing countries were immune from the financial crisis because they weren't directly involved. Ultimately, everybody was involved. Is there a point where COVID cases in developing markets, India, elsewhere, become problematic for the global economy, and then that we start to see out in some of those U.S. names?
Yeah, to the extent that those COVID cases get exported, right? Okay. If those COVID cases get exported around the world, if those COVID cases actually cause true economic pause, then we start to get concerned. But we're not seeing that kind of data deterioration in global markets. We're certainly not seeing any spread widening or real risk-off behavior emerge across global financial markets either. So I think you would need to have some evidence that you're going to have economic stoppages that spread around the world before you can extrapolate rising case counts in these emerging market countries, which, obviously face really difficult conditions, but how much do those conditions get exported? I think you also have to really ask yourself, how much were we really counting on a recovery in India and Brazil?
Right.
Because that's what's priced into the market.
Yeah.
2 weeks ago, were we thinking, oh my gosh, are we going to get a massive recovery out of India and Brazil? I don't think so.
Hey,
and, I don't want to be insensitive, but I think that's the way that the market
perspective, though, yeah.
Hey, Dave Wilson, we have a slew of earnings after the bell today. Whirlpool, Lam Research, Kinder Morgan, Chipotle, Crown Castle International, Discover Financial Services. The list goes on. What are you going to be watching for?
Well, the first two you mentioned, Whirlpool, think about what's been going on with housing. Certainly, if you're making appliances, you figure you'd be benefiting from the demand for homes. And Lam Research, because you're talking chip equipment, and we've been hearing all about these global semiconductor shortages. We got results earlier today out of ASML Holding, Dutch company in the same business. Those American Depository Receipts up 5% after their results. So we'll see if Lam Research carries that through.
Yeah, it'll be an important one to watch. Hey, Dave, thank you so much. Dave will be back a little bit later on with his chart of the day, and our thanks to Gita Martin-Adams over at Bloomberg Intelligence as well.
Let's do the Businessweek Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Got a round number for you, Tim. Today's number is 40. More than 40 global banks, including Morgan Stanley, Citi, and UBS, have signed a pledge to cut pollution from their portfolios and reach net zero emissions by 2050. The Glasgow Financial Alliance for Net Zero, led by former Bank of England Governor Mark Carney, he was on our air earlier today, bringing together several new and existing climate finance pacts involving a total of 160 companies responsible for $70 trillion in assets. The announcement today coming ahead of U.S. President Joe Biden's global summit on the climate. We are all in when it comes to finding better ways to protect the climate, but so too are increasingly investors.
Exactly. Businesses have to be a big part of this. The government cannot take care of it itself, and businesses want to play a leading role.
Money and investments make things happen, I'm just
going
to
to
say.
Funny how that works, right?
It's so funny.
All right, let's get down to Washington, D.C. for a check of world and national headlines with Nancy Lyons. Hey, Nance.
Hey, Tim. Well, President Biden is out with more good news regarding the pandemic.
When tomorrow's vaccine and vaccination numbers come out, we will show that today we did it. Today we hit 200 million shots and the 92nd day in office.
Biden had previously set the goal of 200 million shots to be reached by the end of the month. More than 50% of the U.S. population has now received at least one dose of the vaccine, but Biden faces an uphill battle with some of the adults who've not yet received a shot. A recent poll showed most of them say they do not plan on being vaccinated. Well, wasting no time following the guilty verdict in the trial of former Minneapolis police officer Derek Chauvin, Attorney General Merrick Garland says he's launching an investigation into the Minneapolis police.
I am announcing that the Justice Department has opened a civil investigation to determine whether the Minneapolis Police Department engages in a pattern or practice of unconstitutional or unlawful policing.
Garland says if the investigation turns up unlawful or discriminatory practices, the Justice Department can file suit against the department. Well, more than 4 out of 10 Americans live where the air is polluted. That's according to the American Lung Association's annual State of the Air report being released a day before Earth Day. That means over 135 million Americans are breathing polluted air. The report found people of color were over 60% more likely than white people to live in a county with unhealthy air. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much for that update. There is always a slew of COVID-19 and vaccine rollout stories. Two that caught our attention that we want to bring to your attention is one, Pfizer saying it has identified in Mexico and Poland the first confirmed instances of counterfeit versions of the COVID-19 vaccine it developed with BioNTech, the latest attempt by criminals trying to exploit the worldwide vaccination campaign. All I'm going to say is 2 words, be better.
Yeah, I know. But
Everyone,
this is a
3
market.
words.
It's a market, so criminals are going to get involved. This is a story from Dow Jones that we saw. Vials have been seized by authorities. These were in separate investigations. They were tested by the company and confirmed that they contain a bonus vaccine. Reading right from Dow Jones here, the vials recovered in Mexico also had fraudulent labeling, while a substance inside vials in Poland was likely an anti-wrinkle treatment.
Check this out. The fake vaccine going for about $1,000 a dose, though the people who apparently got them, I think it was about 80 people at a clinic in Mexico got this fake vaccine, don't appear to to have been physically harmed. So we're glad about that. The other one is the European Union's long-awaited COVID-19 shot finally here, raising hopes that the continent can bring the pandemic under control and reopen economies faster than expected. It has been, you and I were marveling kind of going in, where the U.S. was really, it felt like falling behind in terms of getting the vaccine out. But now Europe, we know, has had some difficult months of getting enough vaccines and getting it into the arms of people. So this could be a big, big change.
It could, and let's talk numbers here, because I'm looking at the Bloomberg vaccine tracker right now. It's updated each and every day. More than 925 million doses have been administered worldwide. That's across 155 countries. That's according to data collected by Bloomberg. Here in the U.S., 213 million of those doses have been administered. In the last week, an average of 3.03 million doses have been administered each day.
Wow.
The U.S. is by far leading the pack, but we're not out of this pandemic until every country is vaccinated.
So speaking of other countries, Germany nearly doubling the pace of vaccinations after an increase in supplies and the decision to let general practitioners administer doses in their regular offices. France, Italy, and Spain are following a similar trajectory. The one thing I will say, and I feel like this is, you know, with every conversation with market watchers and others, you got to get the world vaccinated. You got to get the vaccine and the virus under control everywhere. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now. U.S. stocks snapping a two-day drop as dip buyers emerge, fueling a rally in companies that stand to benefit the most from an economic revival. Treasuries and the dollar fluctuated. Right now, we do have the 10-year yield at 1.57%, 10-year down 3/32. S&P 500 index up 30 points. That is a gain of 0.7%. Again, best level of the day on the S&P. The Dow up 267, up 0.8%. NASDAQ up 109, higher by 0.8%. Gold up 0.7, $17.91 the ounce. And West Texas Intermediate crude lower now by 2.2%, $61.31 a barrel. After the bell, lots of earnings today, among them Whirlpool down 1.4%, Chipotle Mexican Grill down 1.4%, Kinder Morgan trading higher by 0.8%, Las Vegas Sands up by 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I like how you say Chipotle.
Chipotle Mexican Grill. I like Chipotle, too.
I do, too.
Who doesn't?
We're going to be talking with Brian Nichol, the CEO of Chipotle, tomorrow.
Oh, fantastic. After earnings, no doubt.
Yep,
Obviously.
exactly.
Correct.
Yes,
Fantastic.
Exactly. All right, Charlie Pellet, thank you so much. So let's get right to it, because we've got a great guest when it comes to COVID-19 and the virus, and there's a lot of things on our minds. Back with us is Dr. Chris Beirer. He is professor of epidemiology and public health and human rights at Johns Hopkins University Bloomberg School of Public Health, supported, of course, by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. He's also senior scientific liaison at the COVID Vaccine Prevention Network. He is back with us on the phone from Baltimore. Dr. Beirer, how are you?
Very well. Good to be with you.
Good to have you here. How do you think we're doing in the United States when it comes to the vaccine rollout specifically and getting ahead of the mutants that are out there, the mutations, and getting to herd immunity fast enough?
Well, the good news here really is that we have two very safe and effective vaccines, the two messenger RNA vaccines, the Moderna and the Pfizer. Those, of course, are both two-dose vaccines. They have not had some of the same problems that have emerged with the Johnson & Johnson vaccine or the AstraZeneca vaccine. This is the challenge that has been rare, but nevertheless significant complication of blood clots. We don't see those with either the Pfizer or the Moderna. So our vaccine rollout is going really very well. We're over, now 3 million adults being immunized every day. And we're expecting emergency use authorization for the Pfizer vaccine to go down to 12 to 17-year-olds as well. That may happen fairly soon.
Can we get out of the pandemic, though, if people under the age of 12 cannot be vaccinated?
Well, about 25% of the American population is children under age 18, Tim. So it is very important that we learn as quickly as we can if these vaccines are as safe and effective in children as they are in adults. That process is mostly being led right now by the companies themselves. The trials are underway. We have the data, as I said, from the 12 to 17-year-olds. We really need to accelerate the research effort for the 5 to 12-year-olds.
Right.
And of course, that's so important for them for, getting back to seeing their friends and getting back to school and getting back to active life, which we really need for our kids.
Right. Getting back to, a so-called normal life. The thing is, bottom line, vaccines are the way out of the pandemic. Done. Right?
No question. No question.
So if we don't get to herd immunity, what does our world look like?
Well, right now, we have a couple of very specific challenges. People have described this as a race between the vaccine rollout and the emergence of these new variants, the mutants that you were mentioning. And that really is a challenge. Some of these new variants are more infectious than the viruses we first encountered. Some of them have more resistance to the broadly neutralizing antibodies that we've been using. And at least one, for sure, the variant that was first identified in South Africa, does appear to be a challenge for at least the AstraZeneca vaccine. The good news is that both the messenger RNA vaccines, Pfizer and Moderna, and as far as we can tell, the Johnson & Johnson vaccines, do appear to provide good, robust protection against the variants that are circulating now. But what we're learning with this virus is that mutations keep happening, and we really have to get ahead of those mutations. The big challenge right now is that the vaccine rollout is stalled in much of the rest of the world. That's because the rest of the world doesn't have the same access to the messenger RNAs. They were relying on AstraZeneca and Johnson & Johnson. And we are seeing huge surges of infection in places like India and Brazil, much of South America, in fact. And if we can't do better with getting control of those epidemics and getting those populations immunized, the current generation of vaccines may be undermined by these new variants. That's a real threat, and we're working very hard to prevent that scenario.
So, Dr. Byrer, what is the solution here? I mean, it sounds like what the only thing to do is for the U.S. to take a leading role in making sure that the rest of the world is vaccinated.
I think that's absolutely essential. I think there are going to be a couple of important steps in that direction. First of all, you may have seen that earlier this week, the European Medicines Association did approve going forward with use of the Johnson & Johnson vaccine, with a guidance that there is a rare but serious complication associated with blood clots. Most of those have been seen in women under age 50. So there is going to be a guidance. There's a hearing on Friday with the Advisory Committee on Immunization Practices. This is the U.S. Independent body that gives guidance to the CDC. I think many expect in the field, they have been collecting and looking for more data on the blood clots. It's very likely, we think, that they are going to do the same thing as the European regulatory body, which is to say they will approve continuing use of that vaccine with the guidance for providers with the caution about the rare blood clots. They have apparently identified a few more cases, but seems like it's a handful, and roughly we're talking about 1 in a million.
Got it. Hey, Dr. Byrer, hang on for a second. We're going to do a little bit of news, but we'll come back with Dr. Chris Byrer. He is the professor of public health and human rights at Johns Hopkins Bloomberg School of Public Health, with us on the phone from Baltimore. You're listening to Bloomberg Businessweek. Carol Massar, Tim Stanovic. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So one of the things I want to talk about, Tim, when we come back with Dr. Chris Byrer over at Johns Hopkins Bloomberg School of Public Health is, I feel like I see it in the conversations around the newsroom. They're like, I got the vaccine. What'd you get? Was it Pfizer? Was it Moderna?
Vaccine envy.
I got J&J. So I want him to dig a little bit deeper into the J&J vaccine because I think there are still some worries about getting that one.
Yeah, I want to hear that. I also want to hear how our behavior can change once we get the vaccine because there's been disagreement from health officials about it.
Right, exactly. All right, we'll get back to him in just a moment. Back to you, though, Charlie Pellet with a check on the world of business. Hey, Charlie.
Hi, thank you very much. And here's what's going on. Stocks higher, holding at or near session highs right now. Right to the numbers. We'll give you the why in a moment. With the S&P up 28 at 4163. That is a gain of 0.7%. Year to date, the S&P now up by 10.8%. We've got the Dow up 255, up by about 0.8%. NASDAQ up 105, also up by about 0.8%. NASDAQ 100 index up 0.5%. Big reversal for the Russell 2000 from yesterday, up right now by 2%. Dow Transports advancing by 1.1%. CSX having a lot to do with that after earnings. CSX now up by just about 4.1%. 10-year yield 1.56%. Gold is up 12.38 the ounce, up 0.7%. Spot gold at $17.91 the ounce. West Texas Intermediate crude down 2.4%. 61.19 for a barrel of West Texas Intermediate crude. Bottom line here, stocks snapping that two-day drop. Dip buyers emerging, fueling a rally in companies that stand to benefit the most from an economic revival. President Biden today calling on employers to use a tax credit to provide paid time off to workers to get vaccinated and for businesses to do more to boost the inoculation effort as the U.S. seeks to get more jabs in more arms. The World Health Organization says coronavirus cases are rising in all regions except Europe, with India driving a surge in Asia. Lawrence Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Radio and Television this morning, she told us that despite progress in vaccinations in the U.S., we cannot get complacent.
I think the key for us in the U.S. is that as we sort of see our increase in vaccination rates, that we don't let our guard down, that we maintain those measures that we know worked well for us earlier in the pandemic and continue to work well. So maintaining distancing wherever possible, limiting your exposure to other people, particularly unvaccinated or vulnerable people, and wearing that mask, which continues to be a really important measure that we know works.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares up 1.2%. Its German partner BioNTech, the ADR is up 3.5%. ADRs of AstraZeneca up 1.6%. Moderna surging today by 7.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. I want to get right back to Dr. Chris Byrer, professor of public health and human rights at the Johns Hopkins Bloomberg School of Public Health, also senior scientific liaison at the COVID Vaccine Prevention Network, still with us on the phone from Baltimore. Dr. Byrer, a listener listening in on our conversation has a question for you, and basically is asking, how can we as parents in good conscience ask our kids to get shots when we have no data to support the side effects on kids? Furthermore, this disease is not a real risk for anyone under 30. Deaths under the age of 18 represent 0.000701%. Basically, they're saying that kids are going to be okay, so why are we going to maybe potentially put them at risk by giving them a shot? How can we do this in good conscience?
Well, the first thing to say is, of course, that we wouldn't ask anybody to have their children be immunized until we have the data. And so those trials are underway. And as I said earlier, the 12 to 17-year-olds data from the Pfizer trial is going to the FDA and being reviewed. So I think the caller is absolutely right that we need to see those data, and parents are going to want to see that before they immunize. I think it's a common misconception to compare COVID-19 disease and deaths in children with those in adults. The real question is comparing COVID-19 disease and deaths in children with other vaccine-preventable diseases in children. And when you do that, the close to 300 children who died already of COVID in the United States looks actually like quite a severe number of cases and a vaccine-preventable infection, we hope. So I think that's more compelling. It's also the case that while children have had much lower rates of illness and death from COVID, they've had a very high burden of non-health issues. The social isolation is hard for kids, the developmental issues, the educational issues that parents are so concerned about. And we think, particularly for the 12 to 17-year-olds, that vaccination is really going to help them be able to engage again in sports and after-school activities and being with their friends. So those all get weighed in. The non-medical complications of COVID for kids have been severe.
Dr. Byrer, I just want to ask about messaging around vaccines, because there has been this idea that, we're still wearing masks after getting a vaccine, we're still being cautious, and I'm wondering if it's sending the wrong message about the benefits of the vaccine. I had Dr. Amish Adalja, one of your colleagues from the Bloomberg School of Public Health, on our show, a Quick Take, earlier today, and he's all for, eating in restaurants without masks after getting a vaccine and really going back to everything that he was doing before the pandemic hit.
Well, I think, it is really important to say that these vaccines have high efficacy against this virus, and particularly against serious disease. So we can do more. The CDC guidance is very clear that immunized folks can meet at home, can meet indoors without masks. That's a huge difference for families and friends, people getting together. The CDC guidance is also that immunized people, and this is fully immunized 2 weeks after your second dose with either the Pfizer or the Moderna, and if J&J is approved again on Friday, as we think it may be for emergency use, then 2 weeks after your one dose of J&J, that people can travel. We still want people to wear masks. We still want to keep that social distancing, although now it has been changed for the CDC from 6 feet to 3 feet. That's very important for getting kids, for example, back into school.
Just very quickly, 30 seconds here. The U.S. has come out and basically banned international travel to most countries. Yeah. Would you agree that we need to stay home, at least for now? And just quickly, if you could.
Yes, right now, I think given the variants that are spreading in other countries and the surges that are underway, domestic travel in the U.S. is okay for fully immunized people, according to the CDC. International travel, we have to be very careful.
What a great interview. Thank you so much. Dr. Chris Byrer, thank you. Professor of Epidemiology, Public Health, and Human Rights over at Johns Hopkins University, Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I feel like we had a checklist and we were like, let's get through this.
We got through them all.
Yeah, we did.
Important comments about kids, too.
Yeah, very much so, because we've got to be thinking about that. All right, let's get to world and national news. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. The U.S. Justice Department will investigate whether there is a pattern of unlawful policing at the Minneapolis Police Department in the wake of former Officer Derek Chauvin's conviction on charges of murdering George Floyd. Attorney General Merrick Garland describes the focus of the probe.
It will assess the effectiveness of the MPD's current systems of accountability and whether other mechanisms are needed to ensure constitutional and lawful policing.
Garland says the Justice Department will publish its findings if it uncovers violations. Well, President Biden's scaled-down inaugural celebration was a nearly $62 million affair.
$61.8 million to be exact. That's how much the president's inaugural committee raised for the made-for-TV event, according to a new campaign finance filing. Companies that gave the maximum $1 million include AT&T, Boeing, Pfizer, and Qualcomm. One labor union, the International Brotherhood of Electrical Workers, also gave that maximum amount. Dow Jones reports the Biden inaugural haul was less than the record $160 $6 million for former President Donald Trump's celebration, but it was less than the $53 million raised for former President Obama's first inaugural. In Washington, I'm Nathan Hager, Bloomberg Radio.
Ahead of tomorrow's start of the virtual climate summit, there are reports President Biden will propose cutting U.S. greenhouse gas emissions at least in half by 2030. People with knowledge of the plan say that Biden will prod other countries to make ambitious cuts as well. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So if you scan the Bloomberg terminal or Bloomberg.com, there are actually several JP Morgan stories, and I highly recommend you go to the terminal or Bloomberg.com to check them out. One, though, that is definitely on our radar today, and I love when our team does this. They just sit down with some executives at a company, often a financial firm, and just walk through an array of topics. And our team did that with the folks over at JP Morgan, specifically JP Morgan veteran and Joanna Martin. She's head of Global Liquidity Solutions, co-head of EMEA Execution Services. Let me get that out there. And they also talked with Sarah Heffron over at JP Morgan, I believe, as well. And they talked about a lot of things, including what their clients are worrying about. And they say, Joanna Martin saying, every time we quiz clients, Europe, US, Asia, about what is your number one concern on a daily basis, it's always access to liquidity. It's always liquidity.
One thing that I found really interesting was talking about skill sets.
Yes.
They asked about what skill sets right now are in demand. And Joanna Martin answered, then when they poll clients, the number one skill that they're adding to their desk is quant data scientists. She says they can't afford to have somebody just sitting there looking at data. A lot of the time, these are quantitative people who are also having to trade as well. So they've got coders who trade, and algo is code essentially. So this is how everyone trades.
Right. That's from Sarah Heffron, Global Co-Head of Electronic Client Solutions and Program Trading for Equities, also over at JP Morgan. They were also asked about Brexit impacting the trading floor. The answer, we are changing some of the ways and the locations from which we are servicing clients, and some of that has already happened. And that's no doubt. We saw that as we've been, following the Brexit saga. We saw people already making decisions. They had to.
Yeah, they did. One more thing about returning to the office, because this is something that we talk about a lot. Sarah Heffron saying that they're coming back to the office because actually, ultimately, we work better in an office, but we've adapted so much and done a lot of good work around understanding what makes people tick. It's not just the parental bit, it's the fact that some of our people are younger and just out of university and had to share a space with their older flatmates at home, and that's really stressful for some people.
Yeah, it's a great read-through on some of the major issues of our time. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks holding at or near session highs. Stocks have snapped a two-day drop. Dip buyers have emerged, fueling a rally in companies that stand to benefit the most from the economic revival. Most major groups in the S&P 500 index are higher. Commodity and industrial shares leading today's charge. Russell 2000, gauge of small caps, climbing now by just about 2%. NASDAQ 100 index up 0.4%. NASDAQ Composite Index up 0.7%, up 96 points. S&P up 25, up 0.6, and the Dow up 244, higher by 0.7%. 10-year yield 1.56%. Gold up $14 the ounce, up by about 0.8%. Spot gold now at $17.9258, and West Texas Intermediate crude tumbling 2.3%, down $1.46 a barrel at $61.21. After earnings, Netflix tumbling 7.3%. Railroads CSX up 4.5%, while Verizon is down by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening to Bloomberg Businessweek. Carol Massar along with Tim Stanovic. Well, in the finance section of the upcoming issue of Bloomberg Businessweek magazine this week, it's the app that made trading easy, Tim, and maybe even just a little too hard to resist.
We are, of course, talking about Robinhood. Joel Weber is editor at Bloomberg Businessweek, joining us on the remote from Brooklyn. And Mr. Lena Igafopoulou is personal finance reporter at Bloomberg News. It is a fantastic story, Joel. My understanding is it was months in the making. Why did you approach it this way, right, about the design of the app?
I think that it was rooted in Missy's original idea, which was, you know, we know what Robinhood represents now, and we know how it's caught on, but, you know, where did it really come from? And so she dug into sort of a little bit of the early days and what the design kind of looked like very early on, and found an interesting character. So Missy, tell us who you found.
Yeah, thanks for having me on. So I think, sort of echoing what Joel is saying, you know, the entire Robinhood phenomenon that we've seen sort of pan out in the past year ultimately comes down to its app. And so as we were reporting the story out, you know, an important part was figuring out what the influence was. And that's where Nir Eyal comes into the picture. This is the author of the book Hooked. And he's basically known in Silicon Valley for his work on behavioral design and habit-forming apps. So he basically spent years studying the methods of some of the most popular companies in Silicon Valley, how they were basically using design to get users to come back to their apps. And so Nir Eyal was sitting at a cafe back in 2012, at which point he was teaching at Stanford, and his work was sort of already out through his blog and through news articles. And he was approached by a young man who recognized him and said, "Hey, we're working on the first no-fee trading app. Can we show it to you?" And Eyal agreed and had a few meetings with this young man, who turned out to be Baiju Bhatt. And he's obviously the co-founder of Robinhood. And along with his other co-founder, Vlad Tenev, they would launch Robinhood a year later. And I think what that really signifies is this idea that, you know, Robinhood is different from the other traditional brokerage firms. This is a platform that has used these tried and tested Silicon Valley methods, this playbook to sort of turn an app into a habit where users feel the need to check in constantly and log back on. And I think, you know, if you take a closer look at the design, you can find different aspects of it that point to that.
Well, that's what, let's pick up on that, because I loved reading your story, and I was going through and kind of counting all these cool things that they do on the Robinhood app, and whether it's making it very simple, whether it's providing a mystery gift, whether there's a hierarchy of data by using different font sizes. You know, these are things that you might not think about when you're using it, but it definitely influences how you use it and maybe how often you might come back to it.
Definitely. I mean, you know, the successful Silicon Valley apps have basically used specific things, right? So first of all, you have triggers that pull users in, and those exist in the form of notifications or emails that pop into your inbox or that show up on your homepage on your phone. Then, you have an app that's basically really easy to use. And so it makes, it as easy as possible for the users to do what they came in the app to do. And then it also involves rewards, which sort of builds anticipation for the users. And on Robinhood, a lot of people have focused on the animated confetti, which is one of the most popular, facets of the app that Robinhood had to remove because it was getting so much scrutiny. But, if you just look at how long it takes to sign up on Robinhood, it's a 5-minute process, way shorter and way quicker than any other brokerage platform. The first thing that happens once you sign in as a new user is you get a sort of scratch off lottery ticket that gives you a free stock. And so, whether you want to invest or not, it doesn't matter because now you have this stock that you can come back to the app to keep checking. And so, looking at that stock price movement makes you sort of more intrigued.
Has that gaming feel, Tim,
yeah,
a little bit?
It's an app, and it wanted, as Missy, as you point out in your piece, it won a design award from Apple. It's not something that typically happens with an investing app. You mentioned the confetti, right? Regulators have pushed back on some of these elements of the Robinhood app. Talk a little bit about the confetti being removed and what Robinhood is doing about that. And I wonder, too, if they're going to start facing even more scrutiny for some of these other features. And ultimately, in order to get ready for this IPO, they're going to have to move away from them.
You know what, Tim? They already are. I mean, you talked about the confetti. That was something that it kept coming up as regulators were looking into the company. And so the company ultimately decided to go away with it. And, just last week, we saw the Massachusetts Securities Watchdog file a complaint in the state seeking to revoke Robinhood's brokerage license. And that's a pretty big deal. And one of the things that they kept calling out in that complaint was the 100 most popular stocks list on the Robinhood app. And what that is basically a list of stocks that are very popular among Robinhood users. And that's featured in a very prominent placement on the app. And, what regulators are saying is you're a brokerage firm. You can't do that because you can't recommend stocks to people. That's not your job. And, what other people are buying may not necessarily be the right investment decision for you. And so that's something that's, also caught the attention of lawmakers in D.C. and something that they really honed in on when Vlad Tenev was down in Washington for that GameStop hearing a couple of months ago. And so that is a feature that, Robinhood is really having to defend. They're saying it's not a recommendation. They're just trying to make their app more social. And so again, we go back to that notion that Robinhood is really trying to blur their lines between, social media and investing. And it's tricky.
So, Missy, I'm curious, having spent a ton of time with the Robinhood app, the early days of the story, you've played with other apps, no doubt. I'm curious, what did you learn about Robinhood as you worked on this story?
I think that what's really interesting when you look at the Robinhood app is, how much trouble they've gotten into for really trying to make this app as easy as possible. And they really have, in a very successful way, sort of broken the barriers of entry for anyone who's ever wanted to invest. And so ultimately, this is a good app. There's no denying. I mean, you see it on the Apple, store page as number one very often, almost weekly. And that rarely happens with fintech companies, but Robinhood is always there. And so, they should be sort of proud for the design that they have on this app. It's really good. It's really unrivaled. It makes it so easy. But, that's definitely not how regulators are embracing this. They think that they've broken all the barriers when it comes to protecting investors by removing all this friction. And I think that ultimately, being too good can actually maybe come back and hurt you.
Yeah, and you do wonder, listen, a lot of companies are out there to create an incredible app, but is it get a little bit complicated when you're talking about investors, maybe investors who aren't so savvy, and there's a lot of money at risk. Joel Weber of Bloomberg Businessweek, thank you so much. And Missy Golfapolo, she's, of course, of Bloomberg News. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Businessweek, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that's coming up next.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, April 21st. The Dow, the S&P, NASDAQ holding at session highs. Right now, the S&P is up 26, a gain of 0.6%. Stocks have snapped a two-day drop. Dip buyers are emerging, fueling a rally in companies that stand to benefit the most from an economic revival. Most major groups in the S&P higher, commodity and industrial shares leading the charge. Dow Industrials up 253, up 0.7%. NASDAQ up 100 now, a gain of 0.7%. The NASDAQ 100 index up by 0.4%. The Russell 2000 gauge of small caps climbing 2%, outperforming major benchmarks. So it is an update. We've got the 10-year yield now 1.56%. Gold up $13 the ounce to $17.92, up by about 0.8%. West Texas Intermediate crude down 2.4%, $61.16 a barrel. As for the market backdrop, Savita Subramanian is head of U.S. equities at BofA Securities.
I don't think we're anywhere near done with the idea that the world is shifting from a very closed, stay at home, very defensive and tech-oriented economy to a cyclical recovery, a services recovery, etc. My favorite sectors, financials, industrials, and energy.
The airline industry's chief lobbying group has widened its estimate for losses this year by about a quarter, saying new COVID-19 flare-ups and mutations have pushed back the timeline for a restart of global air travel. The International Air Transport Association now says carriers will lose about $48 billion in 2021. It had earlier forecast a $38 billion deficit. Among some of the airline names, UAL up 2.7%. American up 2%, Delta up 2.2%, Southwest up by 2.8%. And that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so watching shares of Apple on this Wednesday, call them little change, unchanged. They were down about 1.3% yesterday. You know, we didn't have a chance really, Tim, to talk about Apple hosting its first product event of the year yesterday. It was called Spring Loaded.
Spring Loaded.
Spring Loaded.
What were you most excited about? I mean, I like these AirTags.
Purple phones. I don't know. I don't know if there was much there to be excited about.
Yeah, incremental is how I think of it.
Baby steps. Let's see what Bloomberg Intelligence senior semiconductor and hardware analyst Anand Srinivasan has to say. He joins us on the phone in New Jersey. Anand, so good to have you here with Tim and myself. So, was it a big deal yesterday or just kind of some baby announcements?
No, it was incremental, like you guys said. It was incremental. One of the things is, and you can see how these steps are sort of how they're going iteratively improving the product platform, how they're connecting the dots, how they're weaving the web so that a person is more easily likely to adopt the iPhone platform or the Mac platform or the iPad platform. And as a result, is going to sort of expand their purchases of different products. And then the services consumption is also going to widen. So one of the things, for example, the iPad Pro, the timing is interesting. You've enhanced it ahead of the post-pandemic corporate IT spending boom, if you may. So that could be interesting. This is a pro product, high-end product. And then the same thing with the iMac, which is more of a desktop product, again, for the creative professionals. If there's any spending that's going to happen in the corporate environment, that could benefit from that. The other part of it was the use of the M1 chip, right? I mean, more and more products are using their own silicon. And sort of Apple is a top 10 semiconductor company now. And so outside of that, I guess the purple iPhone, that's cool.
Come on, you were excited about that.
Look, I actually have a serious question about that because that was what was getting a lot of attention on social media yesterday as this was unfolding. And it makes me think back to that first iMac that Steve Jobs unveiled, right?
Yeah, the colors.
Yeah, those candy-colored iMacs. And I think, I mean, what does it tell you about how Apple is thinking about its customers right now, and the fact that it does this sort of out of a traditional cycle of an upgrade for an iPhone and a computer?
Look, I mean, they definitely have their finger on the pulse of the customer. The timing is right. The pricing is interesting. And these things go a long way, right? So appeasing the customer through providing very powerful products, no doubt, but also fun products. And so that's a big deal. I think you were mentioning the AirTags earlier. I think that product could have some serious traction, just purely judging by how many times I lose my stuff.
Right. I already used the
Tile.
Tile. Yeah. Thank you. I lost what it was, Carol. I couldn't even mention it.
I know. Well, what's the difference?
But you can't lose the tile, right?
Exactly.
So what's the difference between what Apple's doing and Tile's doing?
And in the grand scheme of things, not a whole lot, but I think this product is particularly advantaged in that the ecosystem is bigger, right? So you're connected, and as a result, you're more likely to buy this product. And the pricing is compelling. You can get a multi-pack for $99, and you stick one on the other things adjacent to the iPhone that you carry, your wallet, your purse.
Your Bloomberg badge. Somebody said that's what we need to do is put on our Bloomberg badges because we're always losing them.
It's true.
It could happen.
It's true.
What about in the grand scheme of things? I think the products don't move the needle. We haven't changed our model as a result of these enhancements.
So one thing that I was thinking a lot about as this announcement was happening was Apple's focus on privacy, because that's one thing that over the last few years it has really tried to differentiate itself against with its competitors. It talks about how it doesn't use your data, and Tim Cook is taking a leading role in that, and it's made it a big part of its marketing. How does it balance that with AirTags? Because these are trackers.
With AirTags, so that's a great point. Each of those transactions gets a separate ID, the details of where the product is located, and how it communicates with the iPhone, et cetera, is encrypted. Neither Apple nor anybody else knows the data encompassed within the transaction. So that's in keeping with Apple's privacy mantra. So that's again, I view Apple very positively from a privacy vector.
Hey, one thing I want to ask you, since we've got you, Anand, is a story, I think it was yesterday, it was out, that Apple's going to let the social media app Parler back on the App Store after almost a 4-month absence. And I think the iPhone maker coming out, telling U.S. lawmakers ahead of a congressional antitrust hearing that's going to happen later on this week. How does that impact their corporate image?
So I mean, all of this from a financial perspective, it doesn't move the needle at all, right? Okay. So they're trying to play defense and make sure that their PR is covered. I mean, it's hard to have an opinion on whether that moves the needle. Maybe they're playing defense against the regulators so that in the long run they could be perceived positively. Do a small couple of things, inconsequential it may seem from a financial perspective, but helps their PR in the long run in the eyes of the regulators. Again, a little outside my area of expertise for sure, but that would be how I read the tea leaves on something like that.
This is a $2.2 trillion company. How does it get to $3 trillion? We only have about 30 seconds left.
Purple iPhones,
so
perhaps?
Look, I mean, from the iPhone and the services franchise remain the big vectors with which to move the needle. Maybe there's a big buyback coming, and that could sort of interest the investors.
Apple Car, perhaps, Anand?
No, I'm not big on the Apple Car. I just think it's a bad business to go down on.
Cars are tough. Cars are tough.
It's going to be the purple iPhone then. That's how you get to $3 trillion. Anand Srinivasan, always good to hear your voice. Senior semiconductor and hardware analyst at Bloomberg Intelligence, on the phone from New Jersey. As I mentioned, shares of Apple, they are little change in today's trading session. In fact, pretty much unchanged, down about 1.3%. Yesterday, on that product announcement, stock is little change for the year.
I am really excited about those AirTags, Carol.
I lose everything. I am really excited about the purple iPhone.
I'm a big tile guy. No,
we have tiles on all of our keys.
I put a case on every iPhone, so like my iPhone is a distant cry from what it is.
I know. It's like when they ask what color, I'm like, I don't really care because you're not going to see it anyway. All right, let's get back to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says today we should hit 200 million shots in arms, days ahead of his goal to get there by his first 100 days in office. And he'd like to see the fast pace continue. As an incentive, he's asking employers to use a tax credit to provide paid time off for employees to get vaccinated.
Every employee should get paid leave to get a shot. And businesses should know that they can provide it without a hit to their bottom line.
Biden says the IRS is publishing details of the reimbursement process today. President Biden's nominee to head NASA, former astronaut and Senator Bill Nelson, had clear sailing at his confirmation hearing before the Senate Commerce Committee today.
Nelson was warmly endorsed by Republican senators with whom he served as the top Democrat on the same committee.
There's a lot of excitement going on in NASA right now. You've seen it with the flight of the little helicopter, the return of American astronauts launching on American vehicles from American soil.
Nelson noted that the space agency's projects are long-term and carry on through both Republican and Democratic administrations. In Washington, Irv Chapman, Bloomberg Radio.
SpaceX has bumped up its next astronaut launch by a day because of dangerously high waves and winds offshore. Liftoff is now scheduled for early Friday morning from NASA's Kennedy Space Center. The crew will include 2 Americans, 1 Japanese, and 1 French. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you. All right, Nancy, thank you so much. You're listening to Bloomberg Businessweek. Carol Massar along with Tim Stanovic. I hinted before, or actually said before, that there's a bunch of J.P. Morgan stories on the Bloomberg terminal. There's one about J.P. Morgan getting caught up in Europe's big soccer league blunder. We're going to talk about that a little bit later on our broadcast. In the meantime, another story by our Hannah Levitt talks about how J.P. Morgan Chase is adding almost 190 workers to its investment banking ranks as Wall Street firms are really looking to ease the burden for junior bankers inundated with work during the pandemic. We're going to tell you about someone in the financial sector later on and their experience having a heart attack and what was going through their head. We'll get to that a little bit later.
Yeah, that one among the most read. I look forward to talking about it. It also makes me think about, just how work-life balance, right?
Yeah.
I'm giving too much away. We'll talk about that in a minute. I want to talk about this one, the J.P. Morgan, though, hiring the support staff. So the largest U.S. bank has hired 65 analysts and 22 associates around the world, is planning to hire 100 more bankers and support staff. This, according to a person familiar with the matter. It was announced internally in a town hall yesterday.
Was this because they're trying to ease the burden, or is it because investment banking has been really busy between SPACs and deals?
I mean, those things are related,
Sorry,
right?
I don't mean to be such a cynic, but
those are related. I think that
yeah.
So I think that demand is up for the work that they do.
Right.
That's leading to burnout.
Right. And they're making a lot of money in that area, whether they're representing a seller or a buyer.
And look, it also comes at a time where we've talked a lot about this, Carol, the talent war, right?
Yeah,
and
exactly.
that is so important.
Exactly. And I think, it's been an interesting season. We've talked a little bit about bonuses on Wall Street specifically. But, you might remember it was about, I think last month, that there was an internal presentation from junior bankers at Goldman Sachs revealing their intense workloads, and it prompted firms to really double down on efforts to lighten the load. And so we are seeing Credit Suisse, Wells Fargo, offering one-time bonuses. Jeffrey says it's awarding Peloton Interactive and Apple products to junior bankers if you have the time to use them.
Yeah, that's the catch, right?
There is a little catch.
But it is about sweetening the deal, too.
Yes, indeed. And maybe they're thinking about how to help everybody out. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all advancing, holding close to session highs. Stocks have snapped a two-day drop as dip buyers emerge, fueling a rally in companies that stand to benefit the most from an economic revival. Right now, we've got the Russell 2000, dramatic change from yesterday, up now by 2.2%. NASDAQ 100 index up 0.5%. NASDAQ Composite index up by 0.8%. NASDAQ up 111 points right now. Should mention Dow Transport's up 1% today. CSX providing a lot of the strength there. The railroad after earnings up by 4.3%. 10-year yield 1.56%. Equities higher across the board. I mentioned NASDAQ up 0.8. We've got the S&P up 28, up by about 0.7%. The Dow up 254 now, up by 0.75%. Gold up $15 the ounce, up 0.9%, $17.93. West Texas Intermediate crude down 2.5%, $61.12 a barrel. Earnings coming up after the bell. Whirlpool down 0.9%. Chipotle Mexican Grill lower now by 2%. Kinder Morgan up 1.3%, and Las Vegas Sands up by 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It's going to keep us pretty busy later on, Charlie. Thank you so much. All right, so Tim, among our most read stories on the Bloomberg today about how the killing of George Floyd focuses U.S. business to really take a close look, a deep look at its record on race. And someone who follows and reports on this at Bloomberg is none other than our own Jeff Green.
Jeff Green is managing diversity reporter for Bloomberg News, and he joins us now on the phone from Michigan. Hey, Jeff, how are U.S. businesses doing when it comes to actual quantifiable data about what they're doing in order to really examine their own record on race and change diversity within their corporations?
I mean, I think you really have to give it a capital TBD. I mean, we don't really know. First off, it's only been a year. It's really hard to show a lot of change in that amount of time in terms of, hiring initiatives. There's very few people who set their targets to be like a one-year hiring. We know that a lot of companies made at least statements in support. There's been a lot of CEOs signing letters. There's been a lot of talk about adding pay for quotas, but not a lot of action on that, or pay for diversity success. So it is one of those things where there's a lot of action, a lot of noise, a lot of activity, but you really don't know what's going to happen in 2025 when a lot of these goals are supposed to be realized and none of these CEOs are still there. Like, where we'll be.
Why is everybody so slow on this, Jeff? It's not a new problem. It's been around for years. You know this. We all know this. It just really kind of smacked us in the face over the last year and really made, I think, people have a come to Jesus moment, as they sometimes say. So why does this take so long?
Well, I mean, there's two ways to think about this. There's the business. In the story, we talked to Dr. Lomax, who's the president of the United New York College Fund, and he was talking about that, all these companies, in fact, 81 of the companies we looked at said we're going to do something more to recruit from historically black colleges and universities, which is great, but they have 50,000 graduates a year, a graduation rate of 36%, and everybody wants the Howard and Spelman grads. What we really need is for all 101 historically black colleges and universities to get fundamental investment so that the 250,000 kids going there will graduate at a higher rate, and then there will be more quality candidates available to hire from that system, as well as more participants in the black middle class. I mean, that's the one aspect of it is there's like the systemic problem that in this case the corporation probably could address. And I got an email today after the story ran, and I don't think this reader meant to be helpful or in any way introspective, but he said, if every company in your story had done everything they had said they would do, would George Floyd not have been killed? And he's right. And that's the other part of this. There's a broader problem in society that CEOs and companies and letter writing campaigns and hiring can't fix. They can play a role in it, but there's issues in society that are also kind of, I think people get this inflated sense of what a company can actually do and maybe even companies getting an inflated sense of what they can actually do instead of focusing on things like fixing the overall system for historically black colleges and universities, or ensuring that they're kind of going at the basis. I have another example I could give, but I'll
go
pause
ahead.
there and let you ask more questions.
No, go ahead.
Give the example.
Yeah.
Okay, so Ken Frazier, Ken Chenault, Ginny Remedi started this organization called 110, which I think is one of the most interesting things going on out there. The idea is that 1 million new black employees in 10 years in jobs that pay about $50,000 equivalent. So in New York, that'd be more, but here in Michigan, in the Midwest, something like a $50,000 pay. And the key is these just have to be jobs for people that don't need a 4-year degree to get the jobs, because too many, they're saying, if you say you have to have a 4-year degree, even if you have the skills without the degree, you're shutting out a much larger percentage of the black workforce. And so IBM has been doing this already. They're challenging more companies to do it. When they started, they had 37 companies. Last time I talked to them, they had 39. They now have 43. As you do the math, there's no way 43 companies can produce 1 million new hires in a decade. So, and we asked another company why they hadn't signed on, and they said they take a realistic look at where they can actually do things, and apparently that wasn't on the list. And I think this is a tangible commitment you can make to make change. It's hard, and 300 CEOs sign a letter, but only 43 companies sign up to do something measurable. And that's kind of where I look at this. Is I think this is hard. It takes a long time, and if and people aren't comfortable being held to account.
So Jeff, who are the companies that are doing a good job at this, and what exactly are they doing, and what can other companies learn from it? And we only have about 30 seconds left.
Yeah, I mean, I think, some of what IBM has been doing is interesting in terms of at this end, broader hiring, broadening the aperture. And I don't know. I mean, I think any of the companies that are in the 110, I think are at least approaching it from a unique new angle.
Right. And it does sound like you need to have some way of, people have to walk the talk, they have to honor their commitments, but you have to be able to measure it so that you can hold people accountable, ultimately.
Well, we asked 100 companies, show us your workforce as you presented to the federal government. So far, 37 have said yes.
All right.
But by the end of the year, it's 71, so that's progress.
That is progress, and I know you're tracking it all. Hey, Jeff, so good to hear from you. He is Bloomberg News Managing Diversity Reporter Jeff Green with us on the phone in Chicago. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. So have you peeked at all in terms of what Dave's chart's going to be?
You know, I don't cheat every day. Okay,
But don't you look at the chart sometimes to get an idea of what it's about?
But I want a preview for the song, right?
You want a what?
I want a preview
You're not
for the
going to
song.
get a preview of the song.
Well, we're talking a little bit about inflation.
Yeah. I don't know. I'm trying to think of inflation songs.
Yeah.
Okay, we'll see what he has on that front.
We'll be thinking for a while.
All right. Always thinking is our own Charlie Pellet. Charlie, where shall we begin?
All right, well, let's begin with inflation songs. I mean, that's such a Bloomberg quote right there. We'll let Dave Wilson address that coming up in just a moment. Right now, though, a couple of developing stories. Just want to pass along two headlines from the Bloomberg Professional Service. Capitol Building to reopen for official business visitors, and Seabourn and Barbados are teaming up to launch summer cruises beginning in July. We've got stocks higher. The Dow, the S&P, NASDAQ, they're all advancing right now, with the S&P up 31, higher by about 0.8%. We've got the Dow up 273 now, also up 0.8%. NASDAQ up 123, up by 0.9%. 10-year yield 1.55%. Stocks snapping a two-day drop. Dip buyers emerging, fueling a rally in companies that do stand to benefit from the most in an economic revival. Looking at a big rebound today for the Russell 2000, up now by 2.1%, extending its year-to-date gain to 13.1%. S&P, as I mentioned, higher now by 0.8%, and gold up $16 the ounce, up 0.9%. A retreat for crude, down now by 2.6%, 61.06 a barrel. President Biden calling on employers to use a tax credit to provide paid time off to workers to get vaccinated, and for businesses to do more to boost the inoculation effort as the U.S. seeks to get jabs in more arms. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she says despite all the progress we're seeing in vaccinations in the U.S., we cannot get complacent.
I do think that our third wave or fourth wave potentially could be muted, but I think that relies on continuing these measures as we get more and more people vaccinated, and as we move into summer, hopefully seeing a reduction in cases. But I do worry that if we just simply drop all of these things that we know work well while we're trying to get people vaccinated, that we will see a pretty significant uptick in cases, and that our hospitals will see that increased strain again.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, Pfizer up 1.6%. Its German partner, the ADRs of BioNTech, up 3.5%. ADRs of AstraZeneca up 1.4%. Big jump today for Moderna, advancing 8.2%. Johnson & Johnson up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Songs, that are similar titles. I mean, but that one stands out because it may be Bruce Hornsby, his best known song.
I was really waiting to see if you could find a song with the word inflation in it. As Charlie Pellet said, that's the only kind of that's the only thing you'll ever hear on Bloomberg. Like, can we find a song with the word inflation? But it does relate to your chart, inflation.
Yeah, absolutely. And what it focuses on is the comparison between growth and value stocks. So the faster growing companies relative to the ones that are cheaper when you look at earnings or sales or whatever. We've seen those value stocks after years of relative weakness, start to make a bit of a comeback. It's faltered lately, and Morgan Stanley Wealth Management is basically making the case that there's more to come, and they're focusing in on inflation. The whole idea that, if you've got an economy that's doing well, prices are going up, and so, all kinds of companies benefit from that, and that means, you tend to look for growth all over the place. You don't need to focus on the fastest growing companies. You can go to the ones that are cheaper, the value stocks. And so their argument is that what we've seen to some extent in the past few years is sort of inflation's influence on the growth versus value equation, you might say, really kind of being affected by the fact that the Federal Reserve has been, so liberal in terms of its monetary policy that, they've been doing quantitative easing, that they've been doing, a different kind of inflation targeting. So it's kind of disturbed, you might say, the historical relationship. Now they're figuring with all these trillions of dollars being thrown at the economy, as a result of fiscal policy, that sort of the old relationship will come back into force, and that will be a plus for the value stocks. So if you want to know more about this, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
The chart's called the way it is again. I mean, I could have just looked at the name of the chart.
You could have.
But,
I got news for you, Tim.
Is there always a clue like this?
I literally have a song pop into my head when I'm writing that chart headline, and then it shows up the next day on the air.
Learning more and more about you each and every day, Dave.
There you go.
Listen, I love this battle, though, between value and growth, Dave, because I feel like we have had many conversations with people like, growth is done, it's time for value, and then growth just kind of moves ahead. So I think looking at the relationship between the two, maybe trying to figure out where are the gains going forward, it's really important.
Yeah, absolutely. And I should point out, by the way, that Morgan Stanley Wealth Management, they use sort of a market-based inflation gauge, what's called a break-even rate for 5-year Treasury securities. So you're comparing the yield on conventional Treasuries with the ones that are inflation indexed. So that's where they come up with their number. It's fairly similar to what you would see with, say, consumer prices. But anyway, that's a very specific indicator they use to kind of make that connection.
Hey, Dave, real quick. I mean, look, I'm glad you picked inflation as a topic today because we are hearing more and more about it from companies when it comes to earnings. What are you looking for with earnings specifically when it comes to inflation? Is this about wage pressure? Is it about commodity prices getting higher? Where should we be looking?
So far, what we've seen is commodity prices. Procter & Gamble yesterday is one, Kimberly-Clark earlier, and people are pointing that out. And I should point out, Tim, I do have a stock of the day pick for you. Healthcare Services Group, ticker HCSG. It's headed for its biggest gain in a year, thanks to earnings beating estimates for the 5th straight quarter. So who knows? Maybe they'll provide some inflation for the healthcare industry when it comes to housekeeping, food services, that sort of thing.
Your stock of the day, 4:15 p.m. Wall Street time. Find it on Facebook, LinkedIn, and on Twitter @TheOneDave. All right, Dave, thank you so much.
Let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden is celebrating the country reaching his administration's goal of administering 200 million shots in the first 100 days in office. It's actually ahead of time. This is day 92. And to incentivize more people being vaccinated, Biden's offering reimbursement to employers who allow their workers to take time off to get a shot.
No working American should lose a single dollar from their paycheck because they chose to fulfill their patriotic duty of getting vaccinated.
Biden says money to reimburse employers is part of the COVID relief plan. Details on that reimbursement will be posted today on the IRS website. Dozens of world leaders are set to attend President Biden's virtual climate summit that begins tomorrow on Earth Day. We get more details from Bloomberg's Amy Morris.
President Biden made fighting climate change a top domestic and international priority. The White House plans to unveil a new commitment to cut greenhouse gas emissions by 2030. Major economies will discuss climate change commitments during tomorrow's sessions, along with finance, capital markets, and innovations in clean energy. This week's event paves the way for another global summit in November in Scotland that aims to limit planetary warming to 1.5 degrees Celsius. In Washington, I'm Amy Morris, Bloomberg Radio.
Queen Elizabeth is celebrating her 95th birthday today. She chose the occasion to express her thanks for all the support and kindness shown following the death of her husband, Prince Philip. She says it's been a comfort to see and hear all the tributes from around the world. She's marking her birthday in a low-key fashion at Windsor Castle. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. An interesting story on the Bloomberg has to do with Credit Suisse and Archegos Capital Management, specifically the salesman that was working between Credit Suisse and Archegos. It's by our Sri Natarajan and Marion Hoftermeyer. And it talks about how at Credit Suisse, executives had given the point salesman to Archegos Capital Management on its swaps desk the new responsibility of instead of overseeing risk-taking in the broader prime brokerage unit, according to those in the know. Basically, what we're looking at is the salesman who became the head of prime services risk, who hasn't been accused of any impropriety in previous trades with Archegos, but the bank is really looking at how the bank and the managers prioritize boosting revenue over managing against downside. This really goes back to risk management and making sure that kind of the firewalls are in place between people doing sales and maybe protecting the bank against overexposure or exposure.
Exactly, and it's not something that is something we usually talk about, right?
No.
These are behind-the-scenes functions of risk controls. They've been thrust into the spotlight and the limelight after Credit Suisse was left holding the bag on 2 financial catastrophes in just over a month. We're talking, of course, about Archegos, like you mentioned, Carol, and then the collapse of Greensill Capital. The lender's losses have left investors puzzling over whether it has sufficient checks in place.
Yeah, and what's interesting is, like I said at the beginning, it's, what banks usually do, they've got a system, and they do this to kind of limit the dangers of trading with big clients. They assign the sales staff to win the deals. That's one side. And then you've got risk controllers to keep them in check, even if it sacrifices some profit. And I think the concern is the Credit Suisse's prime unit risk chief had been an Archegos salesman. And so you do wonder whether or not there was a breakdown as a result.
We are going to learn more about the bank this week. The company is set to report first quarter earnings tomorrow. They're going to likely involve a more detailed discussion around Archegos mess. It is the worst performing major bank stock this year.
Yeah, listen, as we have been saying all along, more and more details continuing to come out about this. This is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters. I'm Charlie Pellet. We do have 13 minutes to go ahead of the closing bell. Stocks higher right now with the S&P up 38, a gain of 0.9%. The Dow up 327, up by 1%. NASDAQ up 147, up now by 1.1%. U.S. stocks at session highs, snapping a two-day drop as dip buyers emerge, fueling a rally in companies that stand to benefit the most from an economic revival. Most major groups in the S&P 500 higher, raw material, energy, and industrial shares leading the charge. A gauge of small caps climbing more than 2%, outperforming major benchmarks. The Russell 2000 certainly rebounding from yesterday. 10-year yield 1.55%. Gold is up $16 the ounce at $17.94. West Texas Intermediate crude down 2.6%, $61.01 for a barrel of WTI. Earnings after the bell include Whirlpool up down 0.4%, Chipotle Mexican Grill down 1.2%, Kinder Morgan up 1.2%, and Las Vegas Sands higher by 3.1%. I'm Charlie Pellet. That is Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session, getting ready to wrap up the Wednesday trade. We're pretty much hovering at our highs of the session. Charlie just breaking down the trade for you on this Wednesday. Let's get to Ryan Dietrich. He is Chief Market Strategist at LPL Financial. He joins us on the phone once again from Charlotte, North Carolina. Ryan, good to have you back with Tim and myself. So we had 2 down days. I think people were wondering, okay, what's going to happen? Are we worried about earnings? Are we worried about another wave in the virus, at least globally? And then today, here we are, we see a bit of a rally, and people are seeming to buy into the economic recovery trade. And as a matter of fact, as I look at the trade here, we're seeing some buying into the close because we're just took another tick higher.
No, you're right, Carol. Thanks for having me back, first off. But we had the 2-day sell-off, and just like that, the buyers are coming in. I mean, at the same time, I don't think we sold off the last 2 days because people were worried about earnings or the economy. We know those things are really strong. The economy continues to open up. You know, one thing, if you're going to talk about what kind of worries us a little bit here, everyone knows the economy is getting better. Everyone knows earnings are strong. You know, some of the recent sentiment polls are showing the most bulls we've seen, honestly, since January of 2018. But the call ratios are getting pretty low. That's not the end of the world. We've been on for a while saying things are probably going to go higher. But near term, everyone agrees things look good. So that contrarian in us wonders, could it finally be time to have a little, at least consolidation as we enter the troublesome sell in May, go away period, the worst 6 months of the year, right around the corner here?
So what actually worries you, though? I mean, is it just a part of the calendar that's worrying you? I mean, what technically are you seeing that has you concerned?
Yeah, Tim, I mean, let's be very clear. You know, we're not extremely worried. I'm just saying there are some cautionary things coming up. In essence, you know, sentiment is getting a little over the top, a little too optimistic. You mentioned the calendar. You know, if you overlay the bull market that we've had since March of last year with, you know, approximately 80% gain, and you overlay that with the bull market that started in 2009, 2010, they're nearly identical. It's really amazing. But you know what happened in 2010 right about now? The market peaked, and you had almost a 16% correction into the summer months of 2010. Now, we're not saying that's going to happen exactly like that again, but we are saying after over 80% rally, things look really good. Let's not get too spoiled here. But again, another thing that gets us is under the surface. You know, NASDAQ hasn't made a new high yet, right? It hasn't made those new highs. Small caps been underperforming. Some of the more defensive areas, all of a sudden, the last week or two have started to lead. These are just little cracks in the armor, but things we want to be very clear that maybe you know, people should be open to more of a sideways consolidation or outright kind of weakness here.
What does it mean to you that the NASDAQ has not made a new high?
Yeah, Carol, great question. I mean, that's one of those chinks in the armor, right? You don't have total market breadth, you don't have everything participating, and that's normal, But again, when we see that coupled with things like utilities and staples starting to all of us, and real estate starting to take a little bit of leadership, that with the NASDAQ not making a new high are what we call kind of technical warnings, I guess you could say, and that's kind of what we're seeing. Now, honestly, you look today, we're bouncing back nicely today, but still, those are some of the things that have definitely caught our attention, even though the headlines are pretty optimistic.
What are you looking for when it comes to earnings? I know you're following technicals here, but are there big themes that you're looking at for earnings?
Well, Tim, yeah, I mean, we wrote about earnings in our weekly market commentary earlier this week, or 2 weeks ago, and we said we expected earnings to be up about 30% year over year in the first quarter, expected at the time to be up 25%. Now over 80% of companies have beat earnings, and people think, okay, maybe earnings will be up over 30% in the first quarter. So we think it's going to be positive, but the thing that gets us, you look at earnings, financials and banks started things off really, really strongly, obviously last week, yet banks were flat last week, and I know they're bouncing back today, but pretty weak. So there is a little bit of a maybe sell the news mentality, and we saw that at financials, honestly, last quarter. Really strong earnings, kind of a sell the news, and then eventually they resolved higher, and we think that could play out once again here.
Ryan, going back, though, to your comment about the bull market that we're seeing matching up nicely with the 2009-2010 bull market, I do feel like they were very different market environments, no?
Oh, no, well... There's no doubt they were different. I mean, it's absolutely different.
I mean, technically, you can look at moves and say, okay, it's very similar, but I do also think you have to take into account fundamentally what's going on.
Yeah, you're right. I mean, the fundamentals look good, but I mean, from just the technicals, right? We had almost a 75% rally in a year, right? That is like the greatest rally we've ever seen in a 12-month period.
But that's because we dropped like a rock, right? So I mean, we knew clearly what the problem was. I mean, our economy shut down as soon as we figured out how we could start to either, provide some support and then now start to open it up. We understand the bounce. I mean, it's very logical.
No, it is. I mean, the 34% correction, fastest bear market ever. Although at the same time, that rubber band is stretched pretty far. I mean, so we're just being a little cautious there. But let's not forget, this is year 2, right? Year 2 of the bull market officially started on March 23rd. From we know the lows back in 2020, a year later. But year 2 of the bull markets, Carol, they've been higher every single time since World War II. So we're not ignoring. We're just saying there's some worrisome signs. But any pullback at all, we would use an opportunity because this is still a young bull market, a young economic recovery.
Is this really a new bull market or just a continuation?
It feels like we just had like a brief pause in the bull market a year ago. It was a big pause.
Like a big major hiccup and blip?
Speed bump?
Yeah. I mean, we do think it's a major secular bull market that was likely born in 2013 when we broke out the new highs. But again, I guess if anyone remembers what happened back in March, it sure felt like, there are a lot of people that sold and a lot of people that got out. So there's some good arguments either way, but we're still saying let's put it this way, it's a young economic recovery in our view, because technically the NBER still says we're in a recession. No one believes that, but technically we still are, and we think this new expansion is alive and well, and stocks will eventually resolve higher as they tend to do year 2. It's just a little more rocky and a little more troublesome historically. That kind of plays out. We see it that way.
Okay, so what concerns you?
Yeah, well, again, just to put a bow on it, I mean, the overall the overall sentiment backdrop is a little concerning. Again, seasonally, we do know, the summer months historically can be troublesome, so that's out there. And then, the Fed has said they're doing everything they can to keep things going. So could there be a policy mistake? Could the Fed eventually be behind the 8 ball? Not our base case. But, if inflation starts to creep up, and 44% of small businesses in a survey in Wall Street Journal just said that they're having trouble with supplies, right? It's hard to get stuff all of a sudden. So could there be more inflation, and the Fed is willing to accept that? Could they be behind the 8 ball is something that, again, not our base case, but something that we're watching out for.
Hey, just quickly, your thoughts on the Philadelphia Semiconductor Index, or the semis overall. It's up 15% so far this year. ASML coming out in Europe overnight, and we got some very optimistic news from them. We saw the chip sector really helping out the market trade. We're going to get Lam Research after the close. Technically, how do the semis look right now?
Now, the semis are probably one of our favorite groups in technology overall. You mentioned semis, though, that they're kind of like the NASDAQ, where they haven't quite been able to break back out to new highs where they were recently, and they've been struggling over the last week or so relatively. But overall, we think there's still strong earnings, strong fundamentals, and some decent momentum there. So semis are such an influential group on the technology.
Is that because of the shortage, just quickly,
like
that you like it?
Yes.
In big part?
That's part of it.
Yeah.
That's part of it. Yeah, that's definitely part of it. There's shortage there, and demand is awfully strong. So it's a supply and demand story as well. Absolutely.
All right, we're going to leave it on that note. Hey, Ryan, thank you so much. Really appreciate you walking through the final few minutes of trading here. Ryan Dietrich, Chief Market Strategist at LPL Financial, with us on the phone from Charlotte, North Carolina. Listen, those semi names, this is something we've got to watch. We've heard about supply shortages. Lam Research, after the close, will get some more details about what they're saying. They're an equipment maker for the semi area.
And they've done really well this year with the global decline, or I should say global demand increasing in chips. The company's stock up more than 25% so far this year. We're also expected to hear from Whirlpool.
All right, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, YouTube. We're going to count you down to the closing bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, 2 minutes to go to the end of the trading day here in New York. Stocks right now near their record highs. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the close. And here to help take us beyond the bell, our global simulcast in force, Carol Massar, Tim Stenovic, joining forces with us to bring together our Bloomberg television, radio, and YouTube audiences. Carol, I cannot actually get on my own way today. What's going on in the markets?
You are such a busy man.
Yeah.
Listen, I'm strapping myself in too because I'm expecting a deluge of earnings. We're going to hear from Lam Research. We're going to hear from Chipotle, as you said, folks. We're going to be breaking down because we want to see, Taylor, what they have to say about the outlook. It could provide some more momentum to the markets.
100%, Tim. I'm certainly looking not only the airlines. We took a look at Lam Research, Whirlpool, all within, Tim, this world of the chip shortage. What it means, of course, is we take a look at supply chains, DRAM prices. We get granular on the close.
Yeah, we're going to hear that in just a minute. But thinking about the market and how much different it is just today versus the last 2 days, equities snapping higher, snapping that 2-day drop off. Seems like people are coming in and buying that dip.
Especially small caps.
Dip buyers. Yeah, I mean, what a turnaround. The fact that it's now the outperformer on the day. I mean, people never do these markets by half, and the fact that Russell is currently up more than 2 percentage points, best day that you've seen since the end of March. But we're still seeing, I mean, NASDAQ managing to pull ahead, even though the Netflix numbers came out so poor, and there was a worry about the performance of big tech, Romaine.
Yeah, and that's a really good point here. I mean, when we talk about sort of what's moving the market, it really has been that momentum factor, at least for this day here. Volatility also moving here as well. And you take a look at value and size and some of the metrics that had sort of been leading us to the previous record highs. That's pretty much down all the way at the bottom here. So as we get the closing bells in the S&P 500, here's how it's shaking out. You're up about 38 points on the S&P 500. That amounts to about 0.9%. You're over a 1% gain here on the NASDAQ composite and about a 1% gain here on the Dow Jones Industrial Average, which is going to close right around 34,138. And then, of course, we got to talk about the Russell 2000. The Russell 2000 is the outperformer here on the day. 2239 is where it's looking to settle at. That's up 2.4%.
Yeah, what's interesting, guys, too broad-based, right, in terms of the buying. So we're seeing investors definitely play the economic recovery trade. We saw those industrials, those commodity names definitely bouncing back. We saw financials also coming back. So it's interesting to see that investors really kind of shrugging off some of the worries about global COVID cases and maybe some worries about the outlook. And they really were buying in. Just even the last few minutes of trading, Taylor, we saw an uptick.
You certainly see that on a sector level. I take a look at the level 2 sectors. And for our radio audience, we're up 3% on auto components, durables. You're up almost 2%. Materials, some of the semiconductors up 1.8%. We look forward to Lam Research. Samsung's a big client of the DRAM, some of the wafer chips, right? So that's really what we look forward to as we just wrap up the close here. And on the downside, I have to say, Carol, with Tim, utilities, you know, a little bit lower, media and entertainment, dare I say it, Netflix, no.
Ouch, it hurt big time. All right, so yeah, that was one of the bummers today. Let me go, though, to Taylor, the gainers today. Dish, definitely to the upside. Check out the trade in Dish Networks, up almost 11%, enlisting Amazon, basically getting an assist from Amazon for its 5G network. We're going to see Amazon provide home in cloud for the network. Then you've got the cruise lines. Check out Norwegian Cruise. You can see that stock also a big gainer in today's session. We had that stock upgraded by Goldman to to buy from a neutral. Really, the whole cruise industry moving higher. First Solar also gaining in today's session. That company was upgraded to neutral from underperform at Bank of America. And then Intuitive Surgical, that was a big gainer in today's session, vaulting into the $100 billion club specifically after earnings. So they had a blowout quarter.
Well, let's take a look at some of the decliners, Carol. I can't talk about Netflix enough, guys. We talked about it 24 hours ago when the company came out with earnings, but that was a whiff on those customer numbers. And the company also guiding lower than expected, and that sent shares lower today, down more than 7%. Peloton also taking a tumble today. The company was hit with a class action lawsuit in California. This one says that the company misrepresented their treadmills as safe for households with children. We're also watching Knight Swift Transportation, a transportation and logistics company. The company said that it was warning of a worsening driver shortage. Hey, attracting those drivers and retaining drivers is going to get more expensive.
Talking of shortages, I'm going to go cross-asset for radio, for TV. Let's dig in what happened in terms of your world of commodities. Soft commodities is where I start. When you look at the global macro movers, wheat at 1.4%, but across the board, you're seeing concerns about corn, whether it be your coffee beans as well, or we're seeing those prices push higher as we worry about weather. Arabica, that's the one that we see with Remain. That's your Starbucks order. But on the other side, reverse it, WTI crude off by more than 2%. We're worried about inventory levels in the US. We're also worried about that global demand that, Carol, you were speaking of, these worries about the virus, particularly in India, particularly in the emerging markets. I take you out to FX because, well, actually, Canadian dollar, that is where the star performer was in terms of your currencies versus the US dollar. The CAD, the loonie, really powering up 0.9% today because we actually hear from the first central bank to really talk about taking their foot off the gas. Sure, there's still plenty of support to come, they promise, but they're even thinking about tamping back on that bond buying, and maybe, just maybe, we could see a rate hike sooner rather than later. Taylor, bonds, we see money move in across the world.
And you have to, and just going back to Bank of Canada there, you have to wonder, when you look at them sort of coming off the floor here with regards to their monetary policy, whether at all you can read anything into that, Taylor, about what we might see out of the Fed, whether they move a lot.
Reader at BlackRock says, get ready, it might be coming sooner than we think, and in days like today, it's where those bond companies shine. Unfortunately, I don't shine. It is the day of unch for me. The equity markets, the credit markets, according to Jeremy Siegel, is where all the action is. No one cares about full faith and credit. I care about a 20-year bond auction coming into the print. Carol, the second highest on record. Very good bid to cover of 2.42. Maybe some of the international buyers, are they stepping back in? Nonetheless, we get no movement on the day. I've resigned.
All right, don't resign. We need you. We need you. We also need to hear from the semiconductors. We did hear from ASML overnight in Europe, and that one really kind of knocking everybody's socks off, no pun intended, but seeing 2021 sales up 30%. The semiconductor area, Caroline, they were responsible for really providing some momentum in the U.S. trade today. The stocks was up about 2.5% today.
Chip equipment makers, that is where the money is to be made when you have supply chain issues. This is where the chip companies who need to print them out more are going to be buying from. So ASML on fire, really helping Europe come back on track today as we saw the stock market outperform. And we'll have that key read across to Lam Research Remain. Those numbers coming out now, and it looks as though revenue, third quarter revenue, is seeing $3.85 billion Remain. Good.
Yeah, I mean, this is a good quarter here. I mean, people were expecting it to be good here. You get that adjusted EPS number coming in at basically $7.50, $7.49 to be exact. That's about $1 above, the 90 cents above, excuse me, what the estimate was. 3Q revenue coming in at $3.85 billion versus an estimate of $3.72. So you got a beat on both of those measures. Not seeing a forecast completely here off the board here, but also getting some other earnings crossing the wire right now, including, I'm told, Whirlpool.
Yeah, Whirlpool first quarter net sales coming in above estimates, $5.36 billion versus estimates of $4.85 billion. Look, we think about home builders, we think about people who are moving. When people are moving, they are buying new equipment such as these, such as appliances. That is looking like a really good
Kitchen
top line.
aids.
Is this sustainable though?
Yeah, that's a good question.
Oh, go ahead.
My favorite comment of all the analyst research notes I read about Whirlpool, Romaine is going to laugh at me. We have increased demand for nesting. We're all buying appliances. We are all nesting, Carol.
Nesting?
Well, you know what I was going to say?
Have you seen?
And nesting is what? Sitting at home washing clothes?
Well, some of us. I mean, I don't know. We talked to the CEO over the past year, and he said, listen, consumers aren't going to change their habits over the past year. They've been home, they've been cooking. They all want appliances, and he expects this demand, Caroline, to continue for some time.
I mean, have we checked out Taylor's refrigerator lately for the seltzer that she has there? That is the picture of nesting if ever I do see them. We've shown it to our audience more than once. We should get it back on. She's long seltzer, but Romain, this is an area to focus on in terms of numbers. So, yeah, but interestingly, whether Whirlpool's going to be affected by this, refrigerators, I'm guessing they might have a chip in or two.
Yeah, and this is a big deal. I mean, we're getting obviously the Whirlpool numbers, which of course they rely on chips. We're getting the Lam Research numbers, which of course is benefiting from that chip crunch. We still haven't seen the forecast and the outlook, and that's really what a lot of people want to know here. Whether you're talking about Lam Research, whether you're talking about Whirlpool, Chipotle, Discover Financials, Spirit Airlines, all the companies reporting tonight, it's really not about what happened last quarter. They really want to know about the sustainability of some of these numbers, about margins, and whether that is going to persist here deeper into 2021.
Our team is killing it. They pull a quote from the press release that sums up everything that we know. Semiconductors are reaching new heights of strategic relevance. Lam's differentiated ability to meet our customers is what separates us, highlighting that strong wafer fabrication spending environment. Every analyst, Tim, looking for that strong wafer demand commentary that we're getting.
Look, the fact of the matter is chips are in everything these days, and a global chip shortage is not the type of thing that can be solved overnight. This is the type of thing that has to be solved in years. So it makes sense that companies and analysts are bullish when it comes to equipment makers for chips.
We got Lam Research now. We're up about 1% in the after hours. All right, that's going to do it for Beyond the Bell, our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you back tomorrow at the same time and the same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we're going to be watching those names certainly into the Thursday trade. Lam Research now up about 0.75%, but Whirlpool, I find that an interesting one.
Yeah.
Only because I know just from talking to people, I have brothers who are contractors. I mean, just trying to find materials, anything to do with your home, anything that goes into the home, it's really tough. Yeah. Whirlpool's still up about just shy of 6%.
My parents made an order for furniture. It's not coming until August. But look, Whirlpool's a company.
August of 2020.
Yeah, it's August of 2021, which is good. But look, Whirlpool's a company. It's not just the big appliances, though, right? And people are using them more, right? They're using dishwashers more. But it's also what they're doing at home when it comes to cooking. We saw the huge rise in baking last year. Whirlpool owns KitchenAid. They make those mixers.
Exactly, right? You need that stuff. Listen, Whirlpool is up 30% so far this year. And I think even though we're going to go back into the world, we're going to be traveling, we still are thinking about our homes differently because, as many people have told us, get ready for the next pandemic or another thing that kind of causes us to nest at home.
Carol,
sorry.
It's always with the next
I really am
pandemic.
an optimist. I swear. All right, you have a good night.
Thanks,
I'll see you tomorrow.
Too. See you tomorrow.
All right, let's get back to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is out with some more good news regarding the pandemic.
When tomorrow's vaccine and vaccination numbers come out, it will show that today we did it. Today we hit 200 million shots and the 92nd day in office.
Biden had previously set the goal of 200 million shots to be reached by the end of the month. More than 50% of the U.S. population has received at least one dose of the vaccine. To speed up the process, he's encouraging employers to give their workers paid time off to get the shot, with the option of being reimbursed with money allocated in the COVID relief plan. Well, Pfizer says it has confirmed the first fake versions of the vaccine that it developed with BioNTech. Bloomberg's Nathan Hager reports.
The drug giant says vials seized in separate investigations in Mexico and Poland were tested and confirmed to contain bogus vaccine. According to Dow Jones, Mexican authorities say about 80 people purchased fake doses for about $1,000 each from a clinic that was storing them in beach-style beer coolers. Pfizer says the vials in Poland probably contained anti-wrinkle treatment. Polish authorities seized those from a man's apartment before they could be sold. In Washington, I'm Nathan Hager, Bloomberg Radio.
Attorney General Merrick Garland says the Justice Department is opening a sweeping investigation into policing practices in Minneapolis following yesterday's guilty verdict in George Floyd's death. He says they'll assess whether the department engages in a pattern or practice of using excessive force. Minneapolis's mayor says city officials welcome the investigation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Messer in our Interactive Broker studio. Joining me right now is Charlie Pellet of Bloomberg News. This is why, in some ways, the soccer story a day ago, was it, Charlie? Did I really even need to know what was going on? Because Fast forward 24, 48 hours and
Yeah, and you know,
it's not happening.
The best lesson here, a lesson for life, is read the room, know your audience.
Read the room.
You know,
Yeah,
for
but in
instance,
the U.S., maybe this would have, I don't know.
well, who knows? But you know, I mean, football in Europe, it is deeply local.
Sacred, right?
There is a deep history. There is a fanatical fan base, and you don't want to change what is working. And I think that was the objection from fans, from politicians. Nobody was consulted. It came out of nowhere. It was all about following the money, and that's why I think there was such an uproar. And as you correctly pointed out, this was a big deal earlier in the week. Then all of a sudden, it ended as fast as it began.
All 6 English clubs involved pulled out of the project late yesterday. The Premier League, home to some of the world's most marketable clubs and generates billions in sponsorship and broadcasting revenue. Listen, and I think about JP Morgan. Look, there must have been due diligence because they agreed to back Europe's breakaway league, this super league, if you will, and then all of a sudden it's not happening. I mean, we were talking about, what, $4.8 billion in backing. This was big money.
Big, absolutely big money. All of a sudden you have Manchester United, well known here in the United States. It said, quote, it had listened carefully to the reaction from our fans, the UK government, and other key stakeholders. Chelsea Football Club also said it withdrew after considering, quote, the best interests of the club, our supporters, and the wider football community. But absolutely staggering in those numbers that you mentioned from JPM. Big round numbers.
Listen, and like everybody got involved, even the British Prime Minister, Boris Johnson. I mean, this was something that went all the way up to the top.
Exactly. And again, getting back to the earlier point, deeply local, deep history, fanatical fans.
So it's interesting. The 12 Renegade Club said, I don't know, I'll leave it for you to go to Bloomberg.com because there's lots of details. But it is interesting to see maybe what, if anything, is lasting as a result of this. But great story. Thanks, Charlie. And check out our new Business Week podcast featuring stories on why Robinhood might be too good at what it does and how U.S. businesses need to examine their record on race. Download it now at Bloomberg.com or wherever you get your podcasts. All right, it's 4:15 on Wall Street. I'm watching Chipotle shares a little bit higher, up 1.5% after coming out with their earnings. We'll get to that in just a moment. First up, though, let's get a check on traffic. Here's Ed Kalegi.
Thank you, Carol. It's the best Hudson River crossing to New Jersey, and it is the Lincoln Tunnel at 5 to 10 minutes leaving town right now. The Holland Tunnel trying to leave, not terrible. That's 15 to 20. Trying to get to the George Washington Bridge, that is the challenge because the west side is quite slow. 40s and up in pockets from the 30s and up on the east side of town. And now, just word coming in of an accident down at 20th Street on the FDR, and that's causing a half-hour delay simply to get there. From the Manhattan Bridge, not a great day in Manhattan to be on the roads. 2nd Avenue remains closed between 84th and 79th Street, and that is for continued fire department activity. The Bloomberg 11:30 3-day weather for tonight: clear, breezy, low near 35. Thursday, partly sunny, breezy, high 50 to 55. Friday, sunshine, high 60 to 65. Saturday, cloudy, high almost 70. Right now in Central Park, mostly cloudy, temperature 55 degrees. This report, it is sponsored by LifeLock Identity Theft Protection. 30% of ID theft victims suffered multiple types of identity theft. Get LifeLock. Save up to 25% off your first year at LifeLock.com. Promo code RISK. With the best ride in and out of the city. I'm Ed Kalenki. This is Bloomberg 11:30. Bloomberg Businessweek continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. Let's begin with Spirit Airlines beating estimates. Spirit reporting an adjusted loss per share for the first quarter of $2.48. The estimate for the loss was $2.67. Spirit flying higher after hours, up now by just about 4%. Whirlpool raising its guidance. The appliance maker sees fiscal year net sales up 13%. Had seen those sales up by about 6%. Shares of Whirlpool after hours up now by just about 2%. Also checking in, Chipotle Mexican Grill reporting comparable sales for the first quarter that matched the average analyst estimate. But first quarter digital sales up 134%. They now account for 50% of sales. Stock snapped a two-day drop, closing at session highs. Dip buyers came back into the market today, fueling a rally in companies that do stand to benefit the most from an economic revival. Cruise lines, airlines among the standouts today. Dow Jones Industrial Average up 316, up 0.9%. S&P up 38, up 0.9. NASDAQ up 163, up by 1.2%. Perhaps the big market story, Russell 2000 rebounding today by 2.4%. 10-year yield 1.55%. Gold up 0.9%, $17.93 the ounce. And West Texas Intermediate crude down 2.5%, $61.07 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie. Well, he's all about business and sports, and in an upcoming The Business of Sports special, he returns to his roots, private equity. He wrote a book on it. It's entitled Sweat Equity, which tonight's streaming special just happens to go by the same name. And Jason Kelly, my partner in crime, my former partner in crime, my former co-host.
Always
now
a partner in crime.
Bloomberg Quick Take. That's true. Quick Take, Chief Correspondent Jason Kelly. He's here in our Interactive Broker Studio. How are you?
I'm good. It's nice to see you.
Good to see you. So tell us about, you guys have been on quite a run with the Business of Sports. There's a little bit going on in the world of sports here.
A little bit going on. And even before this new episode drops tomorrow, last week's episode was all about American investors in English football, and certainly that has caught a lot of attention with the news flow, as it were, with the Super League, and I'm sure you've been talking about that. You know, a massive miscalculation. I was talking to somebody earlier today who rightly pointed out that had billionaire owners tried to put this over on fans 5 years ago, the fans would have squawked, and the billionaire owners would have been like, yeah, too bad, goodbye. But power to the people.
Yeah, exactly.
I think we're living in a different world. And, you know, a lot of what we've tried to capture, and certainly true with this latest episode about the fitness world, is kind of the, I'm going to use the word, sort of zeitgeist, and the sort of cultural relevance. And you know as well as anyone, because we've talked about it a million times on this show.
Yes.
Fitness, it's so, and wellness are so baked into who we are.
Well, let's talk about someone who knows all about this, and John Foley, because you caught up with him for your special.
I did. Let's take a listen.
Within 2 weeks, we had 7 or 8 instructors streaming live from their homes or their basement or their bedroom.
Welcome, Peloton family.
What's up, Peloton? Yes, welcome to my house.
I am coming to you live from my parents' home.
When those classes live from home came out, it was a super special moment for internally the folks at Peloton. I mean, people were freaked out. People were nervous. They were scared. They didn't know whether their job was going to be there tomorrow. We really wanted to be there for them with not just content, because you could have taken a class from last year, but something authentic took place when we did live from home, because it's, hey, I'm here.
It's we're all in this together.
Yeah, it was really a pretty fascinating moment, and I'm sure you experienced it too, when Peloton, and I say this in the episode, and I got to catch up with John Foley at the new Peloton studios. It was one of my first in-person interviews, and one of the first times anybody from the outside has been in the new studios. And, I joked with him and said, we're used to the instructors being in our homes. That's part of the Peloton vibe. But now we were in their homes. And I do think it took Peloton, and we know what happened to the stock, it took the company to a new level, clearly. And it was a big moment, as he points out in this episode. And listen, Peloton is at the core, as it were, of all of this. But, a lot of different companies in there. You see some OGs. I don't know if you heard about that, but Suzanne Summers, she makes a little cameo here in Billy Blanks from
Gotta love the
Time
Thigh
Out.
Master. Come on. It was iconic. And I don't know, how many did she sell? Tons.
$200 million worth.
That's a lot.
Yeah.
That's a lot of Thigh Masters.
It's a lot of Thigh Masters, yeah. She makes a comment about cracking a walnut, and, we'll just leave it at that.
Okay.
But, yeah, Billy. Yeah, totally.
200 and...
But, you've got a lot of other folks, some names familiar to you. Beachbody, they're there. They bought Mix Fitness. Herbie Calvis, the president, has been a guest on this show before. They got taken public via SPAC by Kevin Mayer, who used to run TikTok and ran a big chunk of Disney. So they pop up in this episode
How much,
as well.
though, is it like investors, private equity, that have really helped kind of fuel the train when it comes to wellness and fitness?
It's been a lot, and certainly the SPACs have played a big role of late. What you saw was this massive washout, though, of the boutique fitness side, but you're going to see some winners, it feels like, emerge here. We talked to Ann Malum. She's the CEO, or she's now the founder. She just stepped aside as CEO of Solid Core. They just got some private equity money. So the winners are going to be big winners. There have been a lot of losers, unfortunately, throughout the pandemic, just because people haven't been able to go to boutique studios for a long time.
There is something, Jason, don't you think about, though, like a Peloton, this whole idea of coming into your home, but then also people who are going to maybe be increasingly thinking about it because of the pandemic, like this ease of, okay, maybe I want to go somewhere, but I love having it at home.
Yeah, it's a hybrid world. I think we think about it with our work, we think about it with our social lives, we think about it with our fitness lives as well. John Foley is funny in this episode because he basically says,
I believe he's the billionaire John Foley now.
Exactly. He basically says, everybody says, Peloton, it was a pandemic fad. He said, not so sure about that. Because you and I know this was a big deal even before the pandemic.
Yes, absolutely. They had really tapped into something. And to be fair, they were a certain part of the market, but I also think they've become more sensitive about it. And the digital that they have really embraced big time has poured into that.
Yeah, the app has been wildly popular. They've introduced a lower cost bike. So we'll see where they go. Competition coming, but I wouldn't bet against Peloton.
Got a Thigh Master at home?
I do not. Do you?
No. Gotta love it, though.
Aren't you glad I asked?
Do you think I'm lying? No, I am. I'm telling the truth, I swear. Can you still buy them?
Oh, yeah.
Oh, yeah.
Oh, yeah.
TikTok. So let's check it out. Sweat Equity, Business of Sports on Quick Take tonight.
Yep, and then going wide on YouTube tomorrow morning. So it'll be all over your Twitter feed, I'm sure.
You gotta watch it. This is must-see streaming, I'm just gonna say. Jason Kelly, you're the best. I heart you. Bloomberg Quick Take Chief Correspondent Jason Kelly. Check it out tonight on Quick Take. You are listening to Bloomberg Business Week, and this is Bloomberg Radio. Jim Brian Curtis and Doug Krisner live from Hong Kong and New York for Bloomberg Daybreak Asia. Tonight at 6 p.m. Wall Street time, they'll have the latest on the COVID-19 tragedy unfolding in India. That's Daybreak Asia tonight at 6 on Bloomberg Radio.
is 4:29 on Wall Street. It's time for Drive Time Traffic. We do it every 15 minutes right here on Bloomberg Radio. Off to Ed Kalegi. He's checking out Route 22 out in New Jersey. How's it going, Ed?
Well, Carol, 22 is blocked both ways in Branchburg over by Reddington Road, all because of fallen power lines from some of the heavy weather that moved through central New Jersey about an hour ago. So the traffic there is very heavy. 78, a much better idea. Holland Tunnel leaving town 15 minutes, inbound 5, 10 minutes out of the Lincoln Tunnel. Inbound George Washington Bridge, 10 minutes up, 5 down. Now the FDR dealing with an accident northbound at 23rd Street. 2 lanes blocked, a half hour up from South Street, and then stays very slow all the way to the RFK and up the Harlem River Drive. The west side very heavy. 60s on up, and it looks like the Cross Bronx right now. An accident still being attended to southbound at the Alexander Hamilton Bridge. Bloomberg 11:30 3-day weather. Tonight clear, breezy 35. Tomorrow partly sunny, breezy 55. Friday sunny 65. Saturday cloudy and 70. Right now in Central Park mostly cloudy and 55 degrees. This report brought to you by Anshin Accountants and Advisors, proactively identifying tax savings opportunities so that you're not leaving money on the table. Visit Anshin.com. Once again, we do have cloudy skies, 55 degrees with the best ride in and out of the city. I'm Ed Kalegi, Bloomberg 11:30. Bloomberg Businessweek continues.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio on this Wednesday. And this is among our most read stories on the Bloomberg. In fact, it was the most read for most of the day, still ticking high. We're going to get into it. It is about the HSBC manager who had a heart attack and then it went viral and so much more. We'll get into it in just a moment. First up, though, let's get back to Charlie Pellet. Charlie, a lot of earnings after the close today.
And that's what we do. We're all over those earnings. Carol Masser, Kinder Morgan reporting blowout earnings after supplying natural gas to desperate customers during the winter storm that crippled Texas in February. Kinder Morgan after hours up now by about 2.7%. Whirlpool up by about 0.4%. The company boosted its ongoing earnings per share forecast for the full year. That guidance beating the average analyst estimate. Spirit Air beating estimates. It reported an adjusted loss per share for the first quarter of $2.48. The estimate, though, was for a loss of $2.67. Chipotle reported comparable sales for the first quarter that did match the average analyst estimate. Dig deep, though. First quarter digital sales up 134%. They now account for 50% of sales at Chipotle. Update on Wall Street closing at session highs. Stock snapping a 2-day drop. Dip buyers emerging, fueling a rally in companies that stand to benefit the most from an economic revival. As for the market backdrop, Ryan Dietrich is senior market strategist at LPL Financial. He was our guest right here on Bloomberg Business Week.
Near term, everyone agrees things look good, so that contrarian wonders, could it finally be time to have a little, at least consolidation as we enter the troublesome sell in May, go away period, the worst 6 months of the year, right around the corner here?
10-year yield, 1.55%. S&P up 38, up 0.9%. The Dow up 316, also up 0.9. NASDAQ up 163, up 1.2%. NASDAQ 100 index up 0.9%, and a rebound for the Russell 2000 up by 2.4%. Gold up 0.9%, $17.94 the ounce, and West Texas Intermediate crude down 2.5%, $61.07 a barrel. Amazon rolling out a pay-by-palm technology at some Whole Foods grocery stores near its headquarters in Seattle to make paying quicker and more convenient. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, head to toe, we're slowly becoming a biometric device.
Yeah, I'm thinking about that at the toll booth as you're driving home today. Put out the palm.
Just like take me all.
Exactly. High five.
All right. Totally. All right, Charlie, thanks so much. Hey, everybody. This is the third most read story on the Bloomberg. It's about the HSBC manager's heart attack. What was going through his head and what it says about being overworked. It is an unbelievable story and another fascinating piece of reporting from Linan Nguyen. She's finance reporter at Bloomberg News. She is with us on the phone in New York City. Linan, I'm so glad we were able to get you on to talk about this. So tell us about Johnny Frostick.
So Johnny is someone who is a sort of regulatory IT guy at HSBC. He's a contractor. And a couple of Sundays ago, he had a heart attack. And the first few things he thought about were work-related. And it wasn't until the fourth thought he had was, oh, what about my wife? Maybe she'll find me dead. And so he wrote this viral LinkedIn post that has just completely caught fire on LinkedIn because, you know, everyone is thinking about overwork and burnout right now. And it just really touched a chord, not just in finance, but just around the world in terms of people who are getting ground down by work right now.
All right. Well, first of all, Johnny's doing okay, correct?
Yes, he's doing okay. Thankfully, he's doing okay and well enough to have given an exclusive interview to us. So he's very philosophical and, you know, very, very much reprioritizing his life right now.
Well, talk to him a little bit more about the conversation you had, because what's interesting is he actually chronicled, right, his near-death experience, as you write, in a viral LinkedIn post that has been viewed almost 7 million times. That's as of Tuesday, so I'm sure it's higher than that. What did he write about, and what did you want to talk to him about?
So first of all, he wrote in very colorful language. So when you read our story, we do include a link to the original post because it is very much worth reading on its own. He talks about the fact that, you know, he kind of prioritized all of these things like being on Zoom calls for 12 hours and just, you know, working and putting up with a lot of crap at work that he honestly did not want to put up with anymore. And just really going too overboard in terms of not taking care of his own life and his own health. And, you know, just going too far in and too deep into work without really taking care of his own health.
And he also talked about the isolation of remote work, which is something I feel like, Linan, we are talking a lot about, have talked about a lot over the past year, especially for people we know in New York who lived alone or felt really isolated. It can be, after a while, not so much fun.
Yes, exactly. And I think that was one of the points he made when we were talking. He said, you know, normally when you go to work, you have a kind of wind up when you go on your commute and you kind of prepare for work and get ready, get in work mode. And then when you come home, you decompress. And right now, those boundaries are just completely obliterated. And so people are just finding themselves working all the time, not setting their own boundaries, not saying, okay, now it's time to shut off, do other things, you know, and take care of your life.
Yeah, it's interesting, too. And listen, you've been covering this, as many of the members of our Bloomberg News team, you know, just writing about whether it's investment bankers on Wall Street. We know it's not easy, especially if you're starting out in the industry, if you're a junior investment banker, you know, you're working around the clock, you're working weekends. We are hearing, though, increasingly where workers are speaking up and that senior executives are looking at ways to maybe ease the situation. Is there really a change going on?
Well, I think certainly in Johnny's case, he really wants to drive this conversation. He's, you know, what I think would be a middle manager. You know, he runs a team of maybe 20 plus people.
Mm-hmm.
So he does manage people. And one of his priorities in discussing this was to really talk about this, you know, issue, to talk about the fact that people are not taking care of themselves and that they're not good workers either. If you don't take care of yourself, then you can't really be particularly productive either. And so he's just trying to open up this conversation about work, about flexibility, and about making sure that people are sort of balanced individuals and balanced workers.
You know, it's interesting, too, and I feel like we are having a more broader conversation, too, about companies, CEOs, leaders who say, let's deal with, you know, inequities in society, let's deal with racism, let's talk about people being overworked. And I do wonder how much of it ultimately leads to actions and a real change in how we do it, or once we get back to quote-unquote normal after the pandemic, do we all be like, yeah, that work-life balance, I got to get this project done?
You know, it's a tough one, Carol, and I think it's down to individuals, but of course it's down to companies as well to understand that people have changing expectations, that, you know, young people, for instance, you know, I'm stunned by the fact that, you know, young Goldman associates would be so bold as to write a deck that says they're overworked and their mental health is suffering, right? That's not something we would have seen even maybe a year ago. And so this is a huge conversation. You know, the fact that almost 8 million people now have read this post, there are 200,000 likes, you know, this is really driving a conversation. All of our main competitors have picked it up and have cited our reporting as well. So it's definitely touched a nerve. Thanks to Johnny's post, not to our story. It really just did grab people. And it's a really colorful read as well. I wasn't able to use the expletives that he did in his post, so you have to go and read the original source.
Darn. Anyway, it is among the most read. As I said, this is what people in the financial community are reading big time. Linan, great reporting as always. Linan Nguyen, finance reporter reporter here at Bloomberg News. All right, Nancy Lyons, take it away. World and national news.
Thanks, Carol. President Biden says today we should hit 200 million shots in arms, days ahead of his goal to get there by his first 100 days in office. And he'd like to see the fast pace continue. As an incentive, he's asking employers to use a tax credit to provide paid time off for employees so they can get vaccinated.
Every employee should get paid leave to get a shot. And businesses should know that they can provide it without a hit to their bottom line.
Biden says the IRS is publishing details of the reimbursement process today. The U.S. Justice Department will investigate whether there's a pattern of unlawful policing at the Minneapolis Police Department in the wake of former Officer Derek Chauvin's conviction on charges of murdering George Floyd. Attorney General Merrick Garland describes the focus of the probe.
It will assess the effectiveness of the MPD's current systems of accountability and whether other mechanisms are needed to ensure constitutional and lawful policing.
Garland says the Justice Department will publish its findings if it uncovers violations. More than 4 out of 10 Americans live where the air is polluted. That's according to the American Lung Association's annual State of the Air report being released a day before Earth Day. This means over 135 million Americans are breathing polluted air. The report found people of color were over 60% more likely than white people to live in a county with unhealthy air. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Radio, Bloomberg Businessweek. Carol Massar here, along with Charlie Pellet, giving me an assist as he is often doing. You always provide me with an assist.
You know, I'm always happy to help you out anytime.
You are definitely always providing help. Hey, you know, also providing help is New York City. New York City Mayor Bill de Blasio announcing a $30 million tourism marketing blitz. It's going to start in June. It's the city's largest ever campaign to recharge a moribund industry that at one time employed 400,000 workers, injected $70 billion into the local economy, and then the pandemic happened.
You know, I'm just thinking I can save the mayor a little bit of money on the music. Check this out. Sing along, because this is a great song.
You are so corny,
You know,
man.
yeah, but isn't that the greatest song ever? I mean, you know, you want to promote New York, New York. I mean, you know, you think back to the Rockettes dancing in Times Square. I tell you, my next wedding, that's going to be the first dance song, you know? Well,
What next wedding?
All right, I'm just speculating, but just imagine the Rockettes showing up as the
Charlie,
entertainment.
Mrs. Pellet is on the phone.
But, you know, the Naked Cowboy could be entertainment. We'll have Tom Keene doing the first day. You know, it's all sorts of
Tom
good
Keene
stuff
and the
there.
Naked Cowboy in one sentence. That is a first for me.
Well, it's, you know, been that kind of day around here. But if that song doesn't cut it, Mayor de Blasio, I've got one more song that also ought to be an anthem for New York.
Totally love this one.
All right, so do I. You know, next company party, when they play that song, You and I on the Dance Floor, Carol Massar.
You know, David Solomon's also calling. He wants his DJing job back, Charlie Pellet. He's like, hey.
Exactly.
I'm the one who does this.
You know, I have this way of you know, driving the bus off the road, but this is all about a major ad campaign for New York, New York.
It's called New York City, or NYC Reawakens, so we're going to have to need a new song. I wonder what the song will be that goes along with
You
that.
know, I've just got two of the greatest right there, and we're not even talking about Frank Sinatra yet.
What's the first thing you're going to do that you haven't been able to do in New York City?
I've already done it, but one of the things I want to do is get out to Governor's Island. That's outdoor, that's safe, that's fun. But Broadway, bring back Broadway in person. Can't wait for that. Concerts, all sorts of good things.
Me too. Here, here. All right, Charlie Pellet. DJ Charlie Pellet, that is.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Update on Wall Street. Stocks closed at session highs. The Dow, the S&P, and NASDAQ all advanced today. Stocks rebounded as dip buyers fueled the reopening trade. Russell 2000 index outperformed major equity benchmarks, a sharp reversal from yesterday. Russell 2000 up by 2.35%. S&P up 38, up 0.9%. The Dow up 316, up 0.9, and the NASDAQ up 163 points today, up by 1.2%. 10-year yield 1.55%. Gold, spot gold up $15 the ounce, up 0.9% at $17.94 the ounce. West Texas Intermediate crude down 2.5%, $61.06 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, here's a day where we actually have two Jason Kellys on. I just had my former co-host on, and right now we're going to welcome back Jason Kelly, General Manager of IBM Blockchain Services, on the phone from Austin, Texas. Jason, nice to have you back here on Bloomberg Radio. Tell us, first of all, you guys recently announced that you're working with another company. It's all about representing patents as non-fungible tokens. We're talking about NFTs or digital assets. Tell us about what you're doing.
Hey there, Carol, and it's okay that I'm the other Jason Kelly. I'm fine with that.
It's a good other. It's a good other.
Great to be back with you. And you mentioned something really exciting here because, you know, when we think about what we're doing, first let's talk about the challenge that's being addressed. The annual sales and license of patents is something that's estimated about $180 billion a year, but only 2% of that value is ever realized. This could be $1 trillion market. But IP, intellectual property, is notoriously it's notoriously difficult to value, validate, and transact. So with that problem, saying, look, you could open up this market for a lot more transactions and licensing and ultimately use of intellectual property, IPWE said, well, let's work with IBM. And this goes back 3 years with IPWE. They said, let's work together and see how we can bring cloud and AI technologies together on a platform. How do we do this? And then came this thought of using blockchain to make sure that a non-fungible token, as you mentioned, could be created, which just means that there is a validated and verified digital copy of some property. So that's it. It's non-fungible. You can't copy it. And that's the beauty of this technology, blockchain, along with cloud and AI, is that now you can validate that patent, intellectual property, and trade it.
Well, so help me explain help me understand something. You talk about this being $1 trillion market, and that, you know, historically we know intellectual property is difficult on a lot of different levels. That's why there's a lot of lawyers involved. Right. And has been difficult to transact, as you said. What's the $1 trillion in assets that go to waste? Are you saying that there's IP out there that never gets classified and noted because it is so difficult to pinpoint? Or is it $1 trillion that maybe, or is it IP that maybe isn't worthy of kind of the classification?
Carol, I believe you've answered part of the question in talking about the legal challenge, and it's legal, there's process. It's an arduous task to try to validate and verify ownership, to then license and transact. And so what I'm saying here is that, just as you called out, there's lots of process there. And why is there process? Because this data has to be validated. In the current system, it takes people to arbitrate, to validate, to say, yes, this is in fact, so this is a patent that belongs to this corporation and it's trying to go to this corporation, so let's go ahead and make all of this happen. So those transactions are very difficult because they're based on trust and transparency, and we pay a lot of people to provide that trust and transparency to us. But if we can do it with technology versus multiple entities, then we can make that happen quicker, better, faster. And that's what we're talking about, is when you can do that in an automated manner, you can then have more transactions. You can then lower that wall of difficulty where you're saying, oh, I would do that, but it's going to take too much time, too many people, and too much money. So if we can address the people, process, and paperwork with technology, as IPWE is doing here, then that opens up the market.
But how does it get cheaper here, Jason? I mean, if you still need, intellectual property is so nuanced, right? And the whole idea of like blockchain and crypto, or blockchain in particular, is that it's designed to create kind of an immutable record, right? Something that doesn't change. So, if IP was that clear, there'd be no need for those IP lawyers. So is the technology you guys are doing, or blockchain, potentially creating more problems than solutions? Because it's so nuanced, IP, yeah.
I think what you called out in this thought that you create an immutable copy, an immutable record, you have a ledger, it then does, in fact, take out the need for the brokering of trust. And so just as you said, you can transact faster. And that's the thought of the value of a non-fungible token. You know that now you have this immutable digital record of that asset. You know that it can't be copied. You know that it's not fraudulent. And because you've now brought that level of certainty, visibility, and trust into the system, you now have eliminated a lot of those handshakes, if you will, in that supply chain of outcome. There's not as many people that have to shake hands because the technology allows those handshakes to be eliminated.
Hey, one other thing I'm curious if you guys have thought about it, and I know you guys at IBM are kind of looking at the world at large and trying to work through some of the big macro stories that are going on and the role of technology in all of this. But one thing that's really tricky with blockchain, we know this with crypto, is environmental sustainability. And I think it's right to talk about it as we're focusing on the climate this week and Earth Day. But minting NFTs uses a catastrophic amount of energy. There are already moves to curb their creation because of their unbelievable environmental impact. What's the workaround for this?
So you call out the thought of sustainability, and I would tell you, Carol, the thought of having a permissioned technology, and when I say permission, that's one where you have those that are participating in that system be validators. If you think of someone saying, hey, I'm going to validate that this patent is this patent and it was created and owned by this group, you are not talking about the same thing that people talk about when we say crypto. Crypto is where you have lots of mining and you have lots of people competing to make sure that some information is validated. It's done in a very, very public
So
system.
NFTs, you're saying do not?
I'm saying in a permissioned environment where you have a capability such as the one we're working with IPWE, where you're going to have players that are going to contain that, I think you're going to have a different type of footprint. And I want to call out something that is worth mentioning, just as you've said, sustainability is at the forefront right now. We as IBM have made a zero carbon footprint pledge, and we also work with World Business Council for Sustainable Development as we see this as an opportunity to use the same type of ledger, if you will, to give that same level of trust in keeping score with carbon credits. So you've given a great example.
Right.
So that's where we see it going.
All right, we got to run. Jason, good to check in with you. Jason Kelly, General Manager at IBM Blockchain Services, on the phone from Austin, Texas. That's going to do it for us, folks. A busy day, some earnings. We're going to follow those Chipotle earnings into the Thursday trade. We're going to actually check in with the CEO, Brian Niccol. That'll happen tomorrow. For the whole Bloomberg Businessweek team, have a great and safe evening. I'm Carol Massar. This is Bloomberg.